Welcome to the European market open, everyone. A minute to go until the start of cash equity trading. Happy Monday as well. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Hiring bounce, stocks in Asia reverse losses and move into the green while futures add to gains after the strong US jobs report. But Jane Fraser tells Bloomberg a recession will be tough to avoid. Back in demand, WTI climbs to the highest level since March after Saudi Arabia boosts oil prices more than expected to customers in Asia. And Boris Johnson expects rebel conservatives to trigger a no-confidence vote as soon as this week. We will be live from Downing Street.
I was kind of thinking, Tom, I mean, we're not having the best Monday after the four-day weekend and celebrations of Her Majesty. It's now raining and there's a tube strike. Imagine Boris Johnson doesn't have to deal with tube strike, but probably not having the best of the start of the week. Futures, no matter, they're holding up higher.
Yeah, after the sell-off in the US on the back of the jobs report Friday showing that tighter labour market is likely to support the calls for some, at least, for rate hikes, not just in June and July from the Fed, but September as well. The market's now pricing in an 85% chance of an additional hike in September. We look ahead, of course, to the end of this week, CPI, consumer prices out of the United States, to build out that picture in terms of how far and how fast the Fed needs to go. The ECB also in focus for us this week as well, Thursday, and that decision around the asset purchase program. In terms of how the markets are shaping up then, it's really China as the catalyst this morning in terms of the easing that we've seen, particularly in Beijing. The FTSE 100 now gaining 0.8% after a solid session in Asia, largely again on the back of that easing of restrictions in China, Beijing and Shanghai. The Spanish IBEX gaining 0.8%, the German DAX up 122 points, getting 0.9%. The CAC 40 over in France gaining 0.8% as well. Let's switch it over and see how things are playing out across these assets. Futures in terms of the Nasdaq futures, the tech-heavy index, looking to build gains around 9%, 0.9%, I should say. This, by the way, in the context, of course, of the deep red, at least losses of around 1% of the S&P 500 for the week last week. The US 10-year currently at 2.97, 2.93, not much of a move there on the benchmark. Sterling in focus for us today, the UK political risk story again, as we were saying in the headlines around Boris Johnson, whether or not there will be that vote of no confidence. Continue to watch what happens in terms of those letters being delivered to the parliamentary group. The pound currently at 125. Brent in focus, $120 a barrel, again, according to our headlines, gaining 0.8%. There's a few mixed stories around oil. That demand picture from China may be improving. Iran, possibly the US allowing more of that crude onto the market, but higher prices from Saudi Arabia when it comes to their clients in Asia. Francine.
Tom, in the last couple of seconds, actually, all of my sectors are now on the green. So we did have basic resources that was slightly in the red, like minus 0.001%, and they've now turned to gains. Basic resources, chemicals, travel and leisure getting between 1.4 and 1.5%. That's where the biggest gainers are. Of course, the focus is on earnings going forward to ECB, and then we had that note from chief economist at Goldman Sachs saying they're still expecting a soft landing from the US. So I imagine a lot of the conversations this week that will, of course, give impetus or not, apart from China and the lockdown to a lot of these sectors and stocks, is whether we can avoid a recession for now in the US and whether the US consumer keeps on being strong.
In terms of individual corporate stories, we're looking at Mercedes gaining more than 1%, this despite the fact that there's a report that they are looking at a recall of about 1 million vehicles on the back of concerns about faulty brakes, but so far gaining from the broader optimism across these markets. Hermes, we're looking at the luxury space, just pulled out one of these luxury players for you, again on the back of the easing restriction in China, such an important market for the luxury space, getting 0.5% for Hermes, and Beiersdorf replacing Delivery Hero within the DAX index, just to that change up, currently gaining 0.7%, the maker of things like Nivea moisturizer. Right, European stocks opening higher then. That's after strong jobs data, around 360,000 additional jobs added on Friday in the US. US employers now hired at a robust clip in May, while wage gains held firm, suggesting the economy continues to power forward as the Fed raises rates at a steep pace to tame red-hot inflation. BTV guests, Bloomberg TV guests, weighed in on the latest data and its implications for Fed policy.
These are still very strong numbers.
This was actually a little bit stronger report.
The Fed's going to be aggressively raising rates by, say, 50 basis points a meeting for the next few meetings.
There's nothing that's going to stop them from continuing this march of 50 basis point increases.
The side effect of that is going to be that you're going to see a slowdown in the pace of job creation.
This is the last solid report you're going to get for a long time.
Is this going to lead to a slowdown in growth?
It needs to thread the needle and do the exact right amount of hikes so that, they can engineer a soft landing.
I still have a pretty high conviction that our softish landing is going to be realized.
You can't get the Fed really out of the business of focusing on the number one priority, which is getting inflation down.
Today's number further confirms that they still have, a lot of wood to chop in terms of taming the inflation that we're seeing.
Now let's get into the key market drivers with our MLive editor Eddie van der Walt and Yogi Dewan, Chief Executive Officer of Hassium Asset Management. Thank you both for joining us. Eddie, I know you spent a lot of time looking at inflation, expectations, we look at the ECB, but overall we're getting a bit of impetus because China is starting to reopen up, and so there's hope that actually it stays on this path.
Yeah, absolutely. I think the China news is going to be a major driver at the moment. We had some soft PMI data out of China this morning, but that's really a nowcast. I think the forward-looking picture for China, if we see this reopening, is much more important. That's important for commodities markets, but it's just important for global sentiment at the moment, because China is just such a big driver, of the world economy at the moment that, if we see a reopening there, I think the markets, yes, definitely, we could see a positive day.
Eddie, what was your take on the jobs market then, the data that we got on Friday, just how strong, how tight that labour market is, the implications, of course, for the Fed?
Yeah, absolutely. You know what? There was a lot of talk about good news is bad news, and if we see a good jobs report, then the markets will react negatively, and there's some truth to that. But the underlying story is that the economy is strong, right? And that, therefore, any sort of short-term impact on the markets will be negated by the long-term picture of strong jobs growth and so on. And I think therefore we're seeing that bounce back. We're seeing markets react a little bit more positively on news that really leads to tightening.
Yogi, what if we were all wrong? So I know I was traveling this weekend, nightmare. This was for a family event in Italy, and everybody and their mother was traveling. I mean, they wanted to go out, everything was blocked. There was traffic at the airports, and airfares were insane. Is this pent-up demand? What if we're reading inflation completely wrong, and this is indeed temporary?
It's hard to think that inflation is going to be temporary with the numbers that we're actually seeing, but it definitely has peaked. And everybody is getting back into the swing of life as normal. Granted, we've got a way to go yet. A lot of the bad news just seems to be priced into the markets already. Look, you've got the VIX at 25, down from 34. And everyone's expecting rate hikes, but we think these are overstated, and we're expecting fewer hikes as growth actually slows.
Yogi, what does that mean for September then? The market's pricing an 85% chance of a hike in September. June, July essentially baked in at this point. Do you think September is off the cards, out of the cards when it comes to the Fed's decision making then?
No, not at all. We're expecting 3 50 basis points rate hikes in the US. That is expected. That is more than priced in. In fact, the market is pricing in 8 rate hikes by the end of the year, not the 6. So we're expecting 6 rate hikes, 2 lots of 50 basis points, and then pause. Growth will reflect a slower economy, and then you'll start to see people making different decisions, policymakers making different decisions about rate hikes and GDP growth of everything that's actually going on.
Yeah, also, Tom McKenzie went to 25 parties in the last 4 days, so he's definitely helping with inflation. Eddie, when you look at a policy mistake, okay, a possible policy mistake, first of all, do you think that the U.S. can, engineer a soft landing? And then there's a report in the FT that the ECB is firming up plans to ward off the bond market, stress that would hit periphery. Is this a real area of concern?
I think so. I think there is obviously wider market concern about the Fed moving too fast, and seeing something like the housing market pull back suddenly, and then the whole economy suffering, and the Fed being ahead of the curve. But the policy mistake that I'm worried about more than anything else is an ECB that's too slow, right? If something like that happens with the Fed and the ECB still hasn't normalized rates, still hasn't hiked significantly above zero, then it's given itself zero room to soften again, right? And I think that's probably one of the most underpriced risks in the market at the moment.
Yogi, when it comes to the debate about recession, we heard this from Jane Fraser over at Citi again, just flagging the concerns about the potential drag on the US economy. We've heard Jamie Dimon, of course, of JP Morgan, also expressing his concern. Is it overstated, the recession risks for the States?
No, absolutely. Look, Friday's jobs data was strong. It's suggesting a softer landing. We've got a jobs market that's really robust with unemployment at 3.6%. You had last week's Fed minutes, which were less hawkish than expected. And inflation data looks to be peaking. We were at 8.5, we've gone down to 8.3. So I think, and we think, that you need to go back to basics. Don't just focus on rate hikes and inflation. Look at earnings. Look at the earnings numbers that we've seen. Q2 earnings growth was 9.2%, revenue growth 13.6%. We're expecting 10% earnings growth, 10% revenue growth for calendar year 22. This is not an economy that's falling into recession. Growth is slowing, but this is not recessionary.
Yogi, thank you so much. Yogi DeWan there stays with us, and our MLive editor, Eddie van der Veld. Eddie had a spot of trouble with his alarm clock, and I was sent a wonderful meme, Eddie, saying, give me coffee to change the things I can and music to accept the things I can't.
I love that. My only problem with my alarm clock was it was set for too early. I don't like that very much.
Don't we all?
It's the 3 alarm clock trick, I think, when you get up early. You need the backups, don't you?
With 30 seconds difference.
Yes, exactly. All right, thank you, Eddie, as ever, for walking through some of the main market themes with us. Coming up, investors price in quantitative tightening according to the results of our latest MLive Pulse survey. We will bring you the details, which assets are most vulnerable. That is next. This is Bloomberg.
Stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open, everyone. 13 minutes into the European trading day. We're holding on to gains. U.S. equity futures also up, and this is as Beijing reopened further from its COVID restrictions. But the story, without a doubt, of the day here in the U.K. is from the BBC. I mean, we've been reporting on it all day that there could be a vote of no confidence as soon as this week. The BBC now going a step further, saying that Tory rebel MPs, or Tory MPs, will vote on the Prime Minister's future this evening from 6 p.m. UK time. I mean, it's pretty remarkable. After also he was booed at the Jubilee celebrations. I thought that was a very significant moment, because as soon as you've lost, you know, the people that come to celebrate that were maybe meant to be the tour de force that was supporting you, then you're in a spot.
Well, that's key, isn't it? It was who was booing. Who was booing? It was people who are obviously patriots, people who are obviously supporting the monarchy. The kind of constituents you would expect would be backing the Prime Minister, not necessarily booing him. So again, yeah, there's something to be read into that, certainly. And at the polls, the Tories are facing a lot of pressure in these local elections, cost of living crisis, and of course the concerns about Partygate. And so backbenchers now, it looks like the 54 votes are in to Ian Brady's committee. We'll see, and certainly the BBC again reporting that you're going to be seeing that vote of no confidence.
I would follow Kitty Donaldson, actually, from our politics team on Twitter. I mean, she spoke to a source that said that the Prime Minister is expecting this, but is also quite confident that he could get through it.
Yeah. Okay, well, from the politics of the UK to what is happening in Europe then. European Central Bank later this week finally about to join the global bandwagon of monetary policy tightening, spurred into action by repeated record highs in inflation. That's getting rate traders excited so much that they're increasingly coming around to a plot line that involves more than the standard 25 basis point move from at least one of the next 5 meetings. Worth noting that currently there is a move, particularly into Italian BTPs at the front end and the long end. In fact, yields down about 10 basis points on the Italian 2-year, down around 9 basis points on the 10-year. Let's bring back in Yogi Dewan, CEO of Hassiam Asset Management. Yogi, talk to us about your views on the ECB, how they're handling the inflation concerns, the rate hike prospects, and the potential vulnerability for these peripheries.
Look, markets in Europe are down 10% year to date. They've been less volatile because the ECB's taken a more gradual approach to dealing with inflation. If you actually look at rate hike expectations in Europe, we're talking about 12 rate hikes. These are 10 basis points hikes, not 25 basis points hikes. That equates to around roughly 5 rate hikes at 25 basis points. So you'll see rates at around 1.36 by the end of the year. This is more gradual. There is clearly more inflation. The risk of recession is significantly higher in Europe than it is in the US. The unemployment picture isn't great. Earnings numbers have been very mixed. And obviously the impact of the war in Ukraine has been quite devastating, particularly with respect to energy prices and oil prices. So an area to be very cautious in, and an area to just really just expect things to progress gradually, not fast in the way that we're expecting to see things happen in the US.
So, Yogi, where are you expecting the most market stress to be in the shape of? Is it European bonds, if the ECB doesn't take care of it, or is it actually through the currencies?
I think the currency is really getting beaten up quite badly, as you suggested, Francine. At the end of the day, we've got rates hovering around the 107 level. Remember, we've come from 114. We're about 25% overvalued versus the US dollar on a PPP basis. So I think the currency markets are going to get hit quite hard. We're seeing rate hikes being priced in now in Europe, as you've suggested, but they are priced into the bond market. At the end of the day, bonds do look very expensive. So I would argue that we'd like to see more flows back into European equities. We've seen masses of flows into US equities over this last month. And the European bond market, I think everybody's going to be very careful about and very cautious about. That's where the stress lies, that coupled with the currency markets.
And Yogi, you made it clear you prefer equity still over bonds. Talk to us about some of the calls, some of your preferred sectors. I know you're adding infrastructure, healthcare, and looking to buy the dip on technology. What would be the trigger for that?
Yeah, no, absolutely. At some stage, we'll look to buy technology on the dip, and we will increase our European and Japanese exposure as well in due course. With technology, I think in the run-up to Q3, depending on guidance that we actually see from the marketplace, obviously depending on market valuations as well, and an improving economic environment. We're wanting to see the rate hikes, we're wanting to see the rate, we're wanting to see a strong employment picture follow through. That's when we're going to start to look at technology names, and we've started to slowly cherry pick in this environment. In terms of sectors that we actually like, I think it's really clear that we need to focus on value equity. So there's a focus more on European equities and UK equities in that regard. We've looked at infrastructure as a hedge against inflation, and we've actually been increasing our healthcare positions as well. Valuations looking attractive in some of the tech, and the biotech is looking quite interesting in this environment too. So that's been our focus at the moment.
Yogi Duan, always excellent. Thank you, CEO of Hassiam Asset Management, joining us this Monday morning with a call to buy at the dip on technology. Now, this past week on Markets Live, on the Markets Live Pulse survey, we have been asking respondents which assets would be most vulnerable to the start of quantitative tightening. Their overwhelming response: the bubble of easy money darlings is about to deflate. Let's get more then with Bloomberg's Danny Berger. Danny, what have we learned then from the survey, the concerns around QT?
Well, it does seem like it's not fully priced in, because you could say, look, tech sold off, crypto is sold off. But in our survey, half of those responding said that taken together, tech and or crypto, half of them, again, said that those were the most vulnerable to the start of QT, which, of course, started last week. Interestingly, there was an age gap. Those who responded that have been trading in this market since before QE started, they were more likely to say junk bonds, but overall, that was about 15% of those who said it. Now, interestingly, we talk a lot about this Fed put. Of course, that goes with rates and QT. So we asked our respondents what would stop QT. This is the second full screen I have for us. And 2/3 of respondents said that it would be essentially something bad, be it economic pain, markets turmoil, or issues with the repo market that had been a concern a few months ago. About 1/3 said that it would be the Fed actually reaching their goals with inflation subsiding. But again, I have to point out 38% said it would be economic pain that stops QT.
Danny, thanks so much. Danny Berger there with the very latest on QT. Now, we're just getting some breaking news from Sir Graham Brady in a televised address. You can see there just outside Westminster and Abingdon Green, saying that he is the organizer, of course, of such votes, saying that a vote of confidence in the Prime Minister Boris Johnson's leadership has been called. Now, I don't think we have a time for it yet, although the BBC was saying just moments ago that this would be, that the Tory MPs would actually vote on this from 6 p.m. UK time.
Yeah, Graham Brady, of course, the head of this rather secretive process of collecting these 54 votes. And we know the pressure has been building on the Prime Minister. We also know from our own reporting, again, Kitty Donaldson, as you mentioned, Bloomberg reporting that the team around Boris Johnson is still confident that they can win this no confidence vote. Nonetheless, this is, of course, of great significance. We'll listen in to Graham Brady around these votes.
I suppose it's in line with recent precedent, and I think it's good for everybody to get these things out of the way as quickly and efficiently as possible.
How long could the contest actually take if there is one at the end of this?
I'm not going to speculate about leadership elections. We're holding a vote of confidence, and it will take place today, and you will have a result this evening.
You mentioned lots and lots of speculation. Is there a feeling in the Conservative Party that it would be good to build this up?
Well, a confidence vote obviously will provide a clear answer. The party will have confidence in the leadership or not have confidence in the leadership. That's the question that will be before my colleagues today.
And if he survives, can you confirm that he is safe for another year, or is there a possibility that the rules could be changed?
Technically, it's possible for rules to be changed, but the rule at present is that there would be a year of a period of grace.
How did you find the mood in your own constituency over this break? In terms of Boris Johnson's leadership?
I think my constituents have been enjoying the Jubilee, as we all have. I think unless you've got any other questions of detail. No? Thank you.
Thank you. Oh, your mic.
Well done.
Okay, that was Graham Brady speaking outside the Houses of Parliament about the no confidence vote that will now take place, again, to test whether or not the Prime Minister Boris Johnson continues to have the confidence of Parliament after Graham Brady and his committee collected those at least 54 letters that needed to be submitted. Let's bring in now Lizzie Burden, our reporter on all things UK, econ and politics as well. A vote then, it's finally happening, a no confidence vote in Prime Minister Boris Johnson.
Yeah, so Graham Brady, the chairman of the 1922 Committee of Tory backbenchers, they're saying that the vote will happen tonight between 6 p.m. and 8 p.m. That means he's received 54 letters of no confidence in the Prime Minister. But of course, that doesn't mean that Boris Johnson will automatically have to step down. Theresa May, his predecessor, survived this stage. It's going to take 180 votes from MPs to oust Boris Johnson. But it really reflects how far Boris Johnson has fallen. Over the weekend, we saw those boos as he walked up the stairs of St Paul's Cathedral for the Queen's Platinum Jubilee service. That is not the reception that other Prime Ministers previously received. Theresa May, David Cameron, Tony Blair. And this is all because of the Partygate scandal and the cost of living crisis.
Yeah, and it's amazing, actually, for a confidence ballot to be triggered. 54 Tory MPs, of course, have to formally put in this letter to Sir Graham Brady. And last week, I think we counted 28. So it did unravel quite quickly. If he has a very thin majority, is that almost as bad as actually not winning it?
Well, you saw Theresa May, even though she won the vote, she decided to step down 6 months later because she was so weakened by that vote. The other test of Boris Johnson's reputation, how battered it has been recently, will be the by-elections that come up on June the 23rd. You've got one in Tiverton and Honiton, another one in Wakefield, both of them because the incumbent MPs have had to step down, one because of a conviction for sexual assault, the other one because of Neil Parish, the incumbent, being found watching pornography in the House of Commons. So a sordid backdrop, throw in the Partygate scandal, and if Boris Johnson loses both of those by-elections, it is going to look even worse. But given this vote is coming before the by-elections, it may be that he's able to survive. And as you heard Sir Graham Brady there saying, he's expected to get a grace period, which means that another vote of no confidence wouldn't happen for another year.
Okay, EMEA, Economy and Government reporter Lizzie Burden jumping on with that live breaking news around that no confidence vote that now faces the Prime Minister Boris Johnson, as she said, 6 p.m. this evening. Let's bring back Yogi Dhawan, CEO of Hassam Asset Management, because now political risk is firmly back in focus here in the UK, Yogi. UK assets, particularly equities, have been something of a safe haven year to date. The pound is currently gaining on the back of this news, up 0.3% at 125. What do you make of this and the implications for UK assets?
Look, the UK is up 4% year to date, and the index is more defensive. There's more value versus tech. And remember, it's had a very poor past performance when you go back over the past few years, coupled with low forward PE multiples at around 10 or 11. The weaker GBP has really supported the FTSE 100. And political risk has been priced in for quite some time. I don't think there's any surprises here around what's happening to Boris. And I too was stunned to see the booing at the Jubilee celebrations. But remember, sterling is around about 8 to 9% undervalued in this environment in quite a meaningful way. And weaker sterling does support earnings, bearing in mind most of the revenues for the FTSE 100 come from the US. So the currency markets become more significant. But when you look at the UK, the worry is inflation coming up towards the 10% level. This is what everybody's focused on. The unemployment rate, in contrast, is at an all-time low. So there's no risk of stagflation, and the risk of inflation, I think, is quite muted. Again, similar to the US, but very different to Europe. So political risk back on the table, but a lot of it is already priced in.
All right, Yogi, thank you so much. Yogi Dhawan there, Chief Executive Officer of Hassam Asset Management, as at least actually this confidence or no confidence vote will happen quite quickly. Now, coming up, there may never be a new refinery built in the U.S. ever again. That's according to Chevron's Chief Executive Officer. We'll hear from our exclusive interview with Mike Wirth. That's coming up next, and this is Bloomberg.
estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Hiring bounce while stocks in Europe open in the green, while U.S. futures add to gains after the strong jobs report on Friday. Jane Fraser Citi tells Bloomberg a recession would be tough to avoid, though. Back in demand, WTI climbs to the highest level since March after Saudi Arabia boosts oil prices more than expected to customers in Asia. And Boris Johnson faces a no-confidence vote tonight after an announcement by the Tories' Graham Brady moments ago. The PM faces a revolt from his own party. Tom, of course, if we watch for this no-confidence vote, that would probably move currencies, but also gilts. And then overall, there's a broader picture of gains thanks to China reopening.
Yeah, China is the real catalyst. When it comes to the UK, of course, Yogi Dewan over at Hassam Asset Management saying, look, a lot of the political risks around the UK is now priced into these assets. We'll see if that holds true. Currently seeing gains of more than 1% on the FTSE 100. But even if Prime Minister Boris Johnson survives this vote of no confidence, which his team expect that he will, he is clearly a damaged Prime Minister at this stage. In terms of the broader markets, European Stock 600 gaining 0.6%. The DAX is also up 0.7% as well. The China catalyst, again, the opening of the major cities, of course, the capital, Beijing, restrictions being eased quite rapidly, in fact, in the capital, even as mass testing continues. Shanghai as well. That is boosting, certainly, the stocks and sentiment around what is happening in China. On the back of, as well, that support that Premier Li Keqiang has really underscored. So that continuation, that combination of support from the economic front, but also the easing of measures to propel those equities in China higher, and the read across what's happening here in Europe. In terms of the markets, then clearly sector by sector, you're seeing that risk on move. Treasury and leisure, technology, media, all gaining comfortably more than 1%. Just three sectors in the red at this point. The more defensive sectors, the likes of healthcare, telecoms, construction material, is essentially range bound. So that is how the sectors are shaping up 30 minutes into today's trading session this Monday morning. Francine.
Now, Tom, Chevron chief executive Mike Wirth says there may never be a new refinery built in the U.S., despite surging gasoline prices, as policymakers move away from fossil fuels. Well, he spoke exclusively to Bloomberg Alex Steele about supply constraints and his outlook for the crude market.
We've seen a cycle that, frankly, is different than past cycles. In the depths of the pandemic, demand collapsed at a rate we'd never seen before. And activity contracted because it had to, and there was no demand for incremental production. We were looking for ways to store production that the world really didn't need. And now we've seen the reverse of that, in a dramatic increase in demand, economies that have largely reopened, but not completely yet.
So no sign of demand destruction yet, based on where we've been?
No, quite the opposite. We're still seeing real strength in demand. We're seeing, international air travel is the strongest since before the pandemic. China still has a ways to go. So a lot of signs that demand continues to be very strong. And demand typically in our industry moves faster than supply in both directions. And we saw that in 2020. We're seeing that today.
So in terms of supply, you are working hard in the Permian. Your production is looking to be 17% or 15% increase, right? If I said to you today, pump more, literally, could you?
I couldn't pump more today. The incentives today are to pump as much as you can. And the decisions that lead to today's activity were made 2 years ago. And there are lead times in all of these things. It's land work, it's permitting, it's roads, it's infrastructure, it's drilling rigs, completion crews. There's a lot that goes into planning and executing production growth. Last year was the highest year of production in the history of our company. First quarter this year, we were up 10% versus first quarter a year ago. So we're doing our part to meet this growing demand, but it's not instantaneous. It requires a longer lead time. Even in the shorter cycle portion of our activity, it doesn't happen quickly.
So if we pretend that maybe it could, where's the biggest bottlenecks? Is it sand? Is it labor? Is it wages? Is it transportation? Like, where's the problem?
In the U.S., in particular the Permian Basin, where there's the most activity, it's all of the above. During the pandemic, operators, shut activity down. The companies that support our work had to do the same. Workers left and went to other parts of the country. Rigs were stacked up. Those that were still in the field, when they had maintenance issues, you took parts off of rigs that were in the yard. So all of those things now need to be reversed, and so there are very real constraints. I mentioned earlier, we plan our work and then work our plans. So our plans to continue to grow were laid in place even back during the depths of the pandemic. But to incrementally change that right now, there is a lot of work that has to happen and a lot of constraints that have to be solved for.
Like, it wouldn't matter how many times the stock hit a 52-week high, or it wouldn't matter like what the oil price was, is what you're basically saying.
Yeah, the price of the day doesn't influence our capital decisions and our activity. We have a long-term view on supply, demand, markets, technology, policy, and that's what sets our capital spending.
That was Chevron Chairman and CEO Mike Wirth. WTI crude has climbed back up around the $120 mark after Saudi Arabia raised prices for July shipments to Asia amid expectations of a boost in summer demand. The price represents a near 3% jump since OPEC and its allies agreed to boost production in their latest meeting. Joining us now for more on these markets then is Martin Ratz, Global Oil Strategist at Morgan Stanley International. Martin, thank you for joining us this Monday morning to talk through a number of themes that are playing into these oil markets. Let's start with the demand out of China. The oil markets, do they need to brace now for a China demand shock given the easing of restrictions we're seeing?
Well, the answer to that, surprisingly, is a little bit yes and no. If you take a truly global view of demand, then China is clearly important. At some points during April and parts of May, we lost 2 million barrels a day of oil demand from China. And that is now likely to come back sometime between now and the end of the year. It won't be instantaneous. But what has been interesting is that during that period, actually, Chinese importers have kept up crude purchases. So we've seen significant stock builds in China as well. So if you're asking me, is China end-user demand coming back? I think so, yes. We can see that in lots of data. If you're asking me, is therefore China going to exert more buying pressure in the international markets? Well, the effect might be muted a little bit because of the inventory builds that they've had recently.
Martin, so where do you see the price of oil going? What's the highest it can go?
Over short periods of time, the oil price can be almost anything. A little bit like, Mr. Wirth just said in that interview that you broadcast, we're seeing the flip side of what we're seeing during COVID. And during COVID, the price went extraordinarily low. So who knows, it might go extraordinarily high at this point in time. What I would be most concerned about is not necessarily crude, although there is a lot of tightness, but it's really the products and particularly diesel. Like diesel demand is strong pretty much everywhere. Diesel inventories are low and falling in all of the main demand centers. We are still looking at about 1 million barrels a day of jet fuel that were to come back this year if current flight schedules of airlines were to materialize. Jet fuel and diesel are, for a refinery, are very related products. They draw on the same pool of molecules. It is also the case that the diesel and jet fuel demand are even more price inelastic than oil in general. It takes a very, very high price to price out diesel demand. And from that perspective, I think the diesel price can go higher, possibly significantly so, and crude can rally with that. Our current price forecast is $130 a barrel by the quarter.
Okay, sounds like we may have some technical issues there with Martin Ratz, global oil strategist at Morgan Stanley, just saying that he sees $130 on the barrel. Currently, you're looking at Brent $120 a barrel, Francine. Of course, you had the news, as we said in the introduction, that Saudi Arabia has raised prices in Asia on the expectation of demand. Also the line that maybe the US will start relaxing some of the curbs on Iranian oil, allowing some of that oil onto the market. So what MLIFT says, they don't think that's going to have a major impact in terms of a drag on pricing.
Yeah, it was interesting. So I spoke to the Saudi Aramco chief executive about 10 days ago in Davos, and he was saying, look, if you look at the market dynamics, they're okay, they're pretty much balanced, but what he was worried about is a stockpile. So if there was another shock or something bad happen, then we don't have that buffer that we even had during lockdown.
And the stockpiling, exactly what Martin was saying in terms of China, they've built up those reserves. And then in terms of that refining capacity, and our team at Bloomberg have been talking about that lack of refining capacity taken out by what is happening in Russia, of course, a key refiner for these markets. Okay, coming up, we're going to focus on what's happening in China, of course, a key factor when it comes to the energy markets. Beijing is set to roll back its month-long COVID restrictions, as China eyes a return to normal for the capital. We'll get more details on that story next. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Welcome back to The Open, everyone. 42 minutes into the European trading day, and thanks to the reopening of parts of China after COVID lockdowns, you can see a lot of these European stocks actually being supported 0.7% higher for the Euro Stoxx 600. Now, to talk more about oil, we're back with Martin Ratz. He's global oil strategist at Morgan Stanley International. Martin, thank you so much for staying with us. When you look at some of the companies that you like the most, I think you have Shell up there at the top. What is Shell doing so much better than others? We're not that lucky, actually, in terms of our connection, our internet connection. We'll give Martin a break and actually get away from that, because when you look frozen, you look surprised by the question, but he has a great note looking at all of the companies. And of course, he puts Shell remaining our key overweight, according to Martin Ratz. And then I think they have Repsol and BP also overweight. So it's interesting to see the dynamics of, CapEx and the ones that can spend and the ones that can't.
And still seeing that refining margin continue to increase and talking about how you get exposure to that. But the broad takeaway from Martin's note, as you say, is further tightness in this energy market. Again, China a factor, as we've said. Now, Beijing is set to roll back its month-long COVID restrictions, that as the country eyes a return to normal for the capital. Public transport will resume in most districts, with many public venues also set to reopen. That's as the city hits key thresholds for unwinding its curbs. Over in Shanghai, the 1st of June marked COVID Liberation Day. China's financial capital lifted lockdown restrictions after more than 2 months. Bloomberg's Alan Wan showed us what he got up to on his first day of at least relative freedom.
This is Alan. It's June 1st, otherwise known as Shanghai COVID Liberation Day. So I'm about to leave my compound for the first time, really since April 1st. My plan today is actually to take a train from where I live in Puxi all the way to my office in Pudong. And along the way, I might try to get a beer at the Family Mart and maybe even get a shave. It's surprisingly busy. So I was told this is going to be 20 RMB for my shave today, but it could have been $100 and I'll still pay. So folks, how do I look? I gotta admit, I feel like 100 years younger. I feel ready to go to office right now. So far, I've been able to leave my compound without needing to show anything, not even my COVID test results. And I went into the Family Mart and I was able to buy a beer, and then afterwards they asked me to scan my health code. So folks, I encountered my first obstacle of the day. I wanted to go in the mall to this coffee shop and buy a donut, but they told me that I need to take a rapid test before I'm allowed to enter. The nearest center is a few blocks away. And even though I love donuts, I'm not gonna do that. There's a subway station right here, and I'm just gonna take that and head over to the office. I finally made it to the office, and I gotta admit, it was surprisingly smooth. The subways, they weren't very crowded, as you can see, and now I was able to go into my office building and just show them my health code. Hi, what's your name?
Joe.
Joe, how are you feeling right now?
Yeah, very excited, very relieved to be out. Yeah.
So what's your goal today? What do you hope to do?
Go out and get some nice food, maybe do a bit of shopping, just time to relax and go explore the city again.
There are still not a lot of people walking around. So a lot of people ask me, how do you cope? You've been locked down 3 months, and why didn't you leave? Because some people were able to leave. And I tell people that basically my coping mechanism is just living for the moment. And I didn't leave because, I've been here 12 years and I love the city, and I'm a journalist, so I like covering history, both the good and the bad. I'm finally back to my compound. So it was basically a mission accomplished. The only thing I wasn't really able to do was to find a place to sit down and get a donut or eat. A lot of places are still closed, and you can't even get takeout. But overall, like I said, I think this is a good start.
The donuts. Poor Alan. I feel like we should send him donuts, because that was the only failing in his first freedom day.
That was the thread throughout that whole package, wasn't it? He needed to get his donuts. I love the priorities of Alan Wang.
We are all Alan Wang. What was surprising to me, Tony, so we had our own Freedom Day, Liberation Day, whatever you want to call it, but no one was wearing masks in the UK. So for me, it's surprising to look at this, and it's Freedom Day, but actually everyone's still masked up, you still get tested. It's a very different kind of freedom that we had here in the UK.
I've been seeing messages from friends who are in Beijing on WeChat. They are ecstatic that the parks are open, that the shopping malls are open. You can go and get a meal now in restaurants in Beijing. But as you say, the infrastructure's still there. They're still testing people, testing sites about 15-minute walk from wherever you live. And of course, absolutely, the masks are still on.
It's probably similar to our lockdown. Now, let's get straight to the Bloomberg First Word News with Alice Atkins. Hi, Alice.
Morning, Francine. Boris Johnson is to face a leadership vote in his ruling Conservative Party following a series of scandals, including becoming the first sitting Prime Minister to be found to have broken the law. The vote will take place for 2 hours from 6 p.m. this evening after 15% of MPs submitted letters demanding a vote. Calls for Johnson to step down have intensified since a report was released on illegal parties at Downing Street during the pandemic. Ukrainian President Volodymyr Zelensky has visited troops in a southern region occupied by the Russian army, where fighting is ongoing. The UK, meanwhile, says it plans to send rocket systems to Ukraine that will let it strike locations as far as 50 miles away, joining the US, which made a similar pledge last week. This as explosions were reported in Kyiv over the weekend. Hong Kong is seeing COVID cases climb again, with new infections at a 6-week high. The city reported 515 cases on Sunday, the most since late April, with a growing cluster associated with the group of nightclubs in the city's central district. The rise amid signs of backpedaling towards tougher COVID-0 curbs by authorities. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Alice, thank you very much indeed. Coming up, the London Metal Exchange is getting sued more than $450 million over halting nickel trading earlier this year. We will bring you the details next. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open, everyone. 52 minutes into European trading day, and actually we're accelerating gains with the European stock 600 gaining some 0.7%. There is a bit of optimism out there thanks to China reopening, especially Beijing, and that's giving a nice lift-off to these European stocks. Remember, it's also ECB week. Now let's take a look at some of the other events we're looking at for this week, and the Summit of the Americas begins in Los Angeles today. U.S. President Joe Biden and Brazilian President Jair Bolsonaro will hold their first bilateral meeting. Then on Tuesday, Tuesday, Australia kicks off a week full of rate decisions.
Wednesday, it is India's rate decision, as well as GDP and employment data for the euro area, followed, of course, by the ECB's rate decision. That is on Thursday, and US initial jobless claims. And finally, on Friday, we are expecting Russia's rate decision. Now, Paul Singer's Elliott Investment Management is seeking $456 million in damages from the LME. It follows the metal exchange's move in March to cancel nickel trades after a massive short squeeze that ultimately emanated out of China. Joining us now is Bloomberg's industrial commodities reporter Martin Ritchie, who joins us from Shanghai. Martin, the LME has said it will contest the claim vigorously. What have they said about those events then during March, during that short squeeze?
Yes, the events during March, that was the crazy 18 minutes back then that saw nickel rally more than 100%. It was a big, huge short squeeze against a Chinese steel tycoon. Now, the LME stepped in and cancelled some trades, which left a lot of people way out of pocket, who were very angry, and immediately later that day criticised the exchange, and the CEO of the LME, Matthew Chamberlain, came out defending them on that morning, saying that this was an existential issue for some of its clients, that the market was not functioning properly that day, and they had to step in and say, look, what happened? We have to pull it all back. We have to recalibrate those trades, and everything that happened from midnight onwards didn't actually happen.
So are we expecting, what does this mean actually for the LME? Are we going to, see more lawsuits like this? Can it even survive such a scandal?
I can't speak much to whether the exchange will survive, but it's certainly one of the biggest challenges that it's ever had, because when you've seen the ferocity of the backlash, it looked pretty inevitable there were going to be legal cases. Now, Paul Singer's Elliott Management is well known for some pretty aggressive legal cases. It spent 15 years battling the government of Argentina over debt default. Let's wait to see if there are other cases. From the market point of view, it's difficult for the LME because they have to try and still maintain the participation of big clients. We've seen JP Morgan already say it's sort of revising its participation in commodities markets. We've seen Tower Research Capital talk about paring down its activities in the LME. The problem is, that's going to harm liquidity in the exchange potentially over the longer term, although...
Yeah. Martin, all right, thank you so much. Martin Ritchie there on the very latest of the debacle. I mean, this has really sent shockwaves across not only the nickel market, but we've been speaking to a lot of hedge funds and saying, look, it's just the lawsuits are going to pile in just because it's really arbitrary what they canceled, and why do you lose money if someone else was making it at the time?
Yeah, Elliott, maybe first out of the gates on this. You will continue to watch, of course, the implications for the LME on the back of that. When it comes to the UK, of course, the big story of the day is this vote of no confidence that will be taking place later this evening in the Prime Minister, Boris Johnson. Let's take another look at sterling then, which has strengthened on the back of that news. Worth pointing out as well that the FTSE 100 is now the best performing of the major markets, gaining 1.3% currently, of course, 56 minutes into today's trading session. Francine.
Yeah, it's pretty incredible actually that he's facing a Tory leadership vote, as Partygate has anchored MPs, but actually it's quick, right? So they start voting at 6 p.m. and we already have the vote this evening. Stay with us over the next hour. We'll be live in Downing Street with the very latest on this. This is Bloomberg.
Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I know that even with today's good news, a lot of Americans remain anxious.
Certainly, we know there's work to do. We know we're still dealing with inflation.
Overall, the picture is still a very stretched economy.
The recession is certainly not our base case that there will be, but it's not easy to avoid either.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on Monday, the 6th of June. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Boris Johnson will face a no-confidence vote tonight. After an announcement by the Tories' Graham Brady this morning, the PM faces a revolt from his own party. Hiring bounce to stocks in Europe open in the green, while U.S. futures add to gains after the strong jobs report on Friday. Jane Fraser, though, tells Bloomberg a recession would be tough to avoid in the U.S. And back in demand, WTI climbs the highest level since March after Saudi Arabia boosts oil prices more than expected to customers in Asia. Now, first thing is first, so let's check in on the markets. I'm going to start here, actually, with sterling. You can see U.S. dollar versus pound 125.47. Now, the pound is really shrugging off news that the UK Prime Minister Boris Johnson will face this leadership vote, and this is on speculation that he may win the showdown. But also, if you look at some of the bigger concerns of what happens to pound, this is one about the cost of living crisis and what the Bank of England does next. The FTSE 100 gaining some 1.3% overall. We're seeing a lot of these European markets being supported by what's happening in Asia, which is a reopening of certain big cities in China, and then the UK 10-year yield you can see at 2.216. So a lot of the focus is, of course, on what's happening in the UK. The spot market nonplussed, a bit of skittishness, actually, when it comes to sterling options. I'm looking at the Bloomberg Live blog. We also have a Markets Live blog looking at all the ins and outs of what Boris Johnson will face this evening. The pound has a lot to account for in terms of the UK spiraling inflation, of course, and the Bank of England's cool approach to bring it under control. Now, sectors on the move, I think if we have the European stocks and all, they're still supported, 0.1% higher. You can see almost all the industry groups are in the green, with basic resources, travel and leisure gaining between 1.8 and 2%. Even technology is on the high. And then two, actually, industries that are on the down, but nothing huge. If you look at healthcare, they're down to 0.2%. Telecom also under a lot of pressure, but I think 10 minutes ago, they were all in the green. So it's a little bit of a tale of support as we have a higher price of oil, but markets again shrugging that off, looking at China reopening, and that is a significant boost to sentiment across the world. So our top story, Boris Johnson facing a confidence vote this evening. We understand that the Tory MPs seeking to oust Johnson have secured the 54 letters required to force a vote. In fact, we know that since Graham Brady announced it earlier on. Let's get more now from our reporter, Lizzie Burden, who's outside Downing Street. So, Lizzie, a vote on Johnson's leadership will take place this evening. Can he survive it?
Yes, that vote's set to take place tonight from 6 p.m. till 8 p.m. because Graham Brady has told us that he has received the 54 vote threshold to call this vote. But there's a long way between 54 and 180, the number of votes it would take to oust Boris Johnson. And remember, in the past, his predecessor, Theresa May, actually survived a vote of no confidence. And it was 6 months before she actually resigned because she had been so weakened. So there is a chance that Boris Johnson survives this. But the mood in Britain really has changed against the Prime Minister. Over the weekend, you saw him booed as he walked up the stairs of St. Paul's Cathedral for the Queen's Platinum Jubilee service. It underscores how damaged he is by the Partygate scandal and the cost of living crisis, both factors that have brought this vote about today.
So, Lizzie, for those, of course, watching that are less familiar with the way that UK works, what happens if he loses a no-confidence vote?
If he loses the no-confidence vote, then we would expect him to resign, and then we would have a leadership contest. At the moment, the top contenders would be Liz Truss. The other big name would have been the Chancellor of the Exchequer, Rishi Sunak, had it not been for how badly his most recent budget went down, and after that, the scandal around his wife's tax affairs. So she is the main contender, Liz Truss, but she has far less political experience than Boris Johnson, who has managed to unite the electorate in 2019. So the question for Conservative MPs as they vote tonight will be whether anyone else in the Conservative Party can do what Johnson did then.
So, Lizzie, how difficult is it to predict the way it goes? 54 letters. I think last week we only thought he had 28 rebel MPs. At least, I guess, it puts it puts an end to months of speculation about his stability. If he has a very thin majority, what could happen?
Yes, exactly. And the hope amongst many in the party will be that this can draw a line under months and months of speculation about when this vote would come. As I say, there's a huge difference between 54 letters, the number of letters it would take to trigger a vote of no confidence, and the 180 it would take to oust him. But if Boris Johnson only squeezes through this vote, he will be severely weakened, and you may see him stand down in the same manner as his predecessor, Theresa May.
Lizzie, thanks so much. Our EMEA economy and government reporter, Lizzie Burden. Interesting, actually, to see what they need 180 voters to remove Johnson. I'm looking at bookmakers offering a 4-6 odds or an almost 67% chance that Johnson will win today's votes. Now, let's get more on the markets with Max Kettner, multi-asset strategist at HSBC, and our MLive editor, Eddie van der Walt. Thank you both for joining us. So look, a bookmaker offering 4-6 odds. The fact that, he could win this, is this why pound is barely moving?
You know what? I think the pound is barely moving today because we kind of knew this was coming over the weekend, right? We kind of knew that this vote was coming. I'd be less certain than the bookmakers because the Conservative Party, of course, they're ruthless when it comes to elections. If they think their leader can't deliver, they will be absolutely ruthless. But I think more than in the pound immediately, I think we probably see this in options pricing on the pound. I think this probably introduces a measure of volatility in the pound that we are not just seeing just yet. And I think we will see a little bit more of that, as the day progresses.
We're just getting some breaking news from the Chancellor, Rishi Sunak, saying he will support Johnson in a leadership vote. I have to say, Max, it's never good when you're being booed walking up the steps of St. Paul's Cathedral. I mean, I'm no bookmaker, Eddie, but this is usually not a great sign. How does it change your outlook for investing in the UK, Max?
Yeah, good morning, Francine. I think, look, it depends really, right? Because when we look at UK equities, look at the FTSE 100, look at UK credit, both of those universes are actually way too international to be predominantly driven by what is happening with UK politics, right? Now, with UK small caps and mid caps, that's a different question. So if we look at the FTSE 250, that is going to be much more challenged, I think, by those sort of domestic uncertainty. And I don't think, just with today's vote, we probably won't wake up tomorrow and all of a sudden we'll have stability and everything will suddenly go away, right? So this will sort of has really the potential to drag on business uncertainty and business confidence and consumer confidence. That hurts UK mid caps more than UK large caps. And for the sterling, I agree with what Eddie said, right? We sort of knew that was happening and that was coming. But it, of course, again, adds to uncertainty. And one thing that we shouldn't forget on sterling is that sterling most recently has actually moved very much in line with what shorter dated rate differentials and longer dated rate differentials have done. Now, the question, of course, is if we look at shorter dated rate differentials, they're already at 3%. Do we really think the Bank of England can get to 3% in light of all this uncertainty now hitting and this additional uncertainty that now comes on top?
Yeah, and Eddie, this goes back to the point, that I guess the pound has a lot to account for in terms of UK inflation spiraling out of control and the Bank of England really not being able to manage this.
I think that's the point, right? I think you go back to the fundamentals that are driving the pound, because I think the politics of this is impossible to call. Even if we see, a successful no confidence vote, if we see Boris Johnson losing this, what does that mean in terms of policy? We're not going to get a Labour government in power as a result of this. There is too much uncertainty. It's impossible to price, and therefore I think the market carries on as was.
Max, what I think is also impossible to price, but the market seems to be taking in their stride, is actually the reopening of certain big cities in China. I mean, we just don't know unless they get rid of the zero COVID policy. It's unclear what kind of lockdowns we'll see. So is there too much optimism in the market today?
I don't think there's too much optimism around reopening. I think, when we look at perhaps the stories around today around China tech, right? That's the predominant story that is driving Asian equities and Chinese equities today. I do think when we look at EM sentiment, that is extremely subdued. When we look at dollar longs, for example, they've been very, very, very high, right? So the market has been sort of squeezed into long dollar positions already. To me, I think the sentiment around EM and around China in the last 2-3 months has become so extremely rock bottom that we can really see the next sort of month or two a bit of a relief rally around EM and around reopening in China. I don't think there is too much optimism yet. That perhaps can be the case if we get like a, 10-20% rally. That then speaks of perhaps a little bit more confidence. But I don't think we're at that point yet. I do actually believe that sentiment around emerging market assets, whether that is equities or fixed income, is still heavily subdued.
Yeah, and this goes back to the dollar rally, Eddie. What else are you seeing? What are some of the forces that we're going to grapple with this week?
Yeah, I think Max is right there. I think it's absolutely right that EM has become extremely unwanted in the last few months. And what we've seen with COVID as it develops is that every wave has offered diminishing market impacts. And I think that story continues. But I think, we go back to US data, we go back to the ECB. I think we just go back to economic policy at the moment. And I think that will be the major drivers for markets this week.
All right. Thank you both for joining us. Eddie van der Vaart, they're our MLive editor. It's a great MLive today. Also, Venram really bringing the A game. He's very funny today on the blog. And Max Kettner from HSBC stays with us. Now, we'll be back with Lizzie with an update from Downing Street in about 20 minutes from now. Also, coming up, investors price in QT according to the results of our latest MLive pulse survey. We'll bring you the details next. This is Bloomberg.
When you think of cutting-edge technology at sea, you You might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we're just getting some breaking news we've had in the last half an hour or so. There will be a no-confidence vote against Prime Minister Johnson. The Tories MPs will actually vote from 6 p.m. today, and we're also expecting the result later this evening. Our Lizzie Burden's on the ground, and of course, we'll bring you up to date with any news on that. Rishi Sunak moments ago saying that he will stand by the Prime Minister. He will support Johnson in a leadership vote. Now, this past week on the Markets Live Pulse survey, we asked respondents which assets would be most vulnerable to the start of quantitative tightening. Their overwhelming response, well, the bubble of easy money darlings is about to deflate.
They have to do QT. They do not have a choice because there's so much liquidity in the system.
Liquidity is coming down.
Liquidity is going to become a problem.
We're going to see this withdrawal of liquidity really start to bite.
They have to remove some of the liquidity to stop the speculation.
I don't think the actual slow beginning of runoff is going to cause volatility in of itself.
It is expected. It is not a surprise right now.
Without a doubt, we've already begun to see it be priced in.
It is very much in the price right now.
The way that we're thinking about this is obviously the end of easy money.
QT is an unknown.
I don't even understand how QT is going to work either, and I should do, right? I mean, I'm a fixed income guy.
It's going to keep the market on its toes for the time being.
No one does, let's be honest.
Well, let's bring in Bloomberg Daybreak Europe anchor Danny Berger. I just like saying easy money darlings, Danny. I think that's wonderful. So what did the Pulse survey show us?
I may or may not have written that, so I'll go ahead and take credit for it, Francine. Yeah, I mean, look, you heard it there. If you're playing a drinking game where you had to drink every time they said liquidity would not be fit for purpose at this moment, it is this fear. What happens when liquidity comes out of the system? Now, part of the argument is how much of it is priced in. Well, according to this MLI Pulse survey, which around 700 people responded to, tech and crypto are still very vulnerable. In fact, half of the respondents said one or the either. The most came in with tech stocks, even though they're already in a bear market. About 27.5% said tech. Now, there was an interesting generational difference. For those who've been in the market before QE started, they were more likely to say junk bonds, but as an overall survey result, only about 15% said junk bonds. Now, as to when the Fed put comes into play, not just for rates, but of course QT, because that's what we're talking about here, the majority of respondents cited something bad happening, something breaking as a reason to cut back on the tightening of monetary policy. Now, about a third of respondents did say that they would be able to stop because the Fed hits an inflation target. But again, Francine, just worth reiterating, the most common answer, 38%, said QT would end because of economic pain.
Danny, thank you so much. Our Danny Berger there, Daybreak Europe anchor. Now let's get straight to more QT and what that means for asset classes with Max Kettner from HSBC. Max, where do you see the biggest fault lines when QT happens?
Yeah, I'm afraid I can't come up with a smarter answer than what we've just heard. I think that absolutely nails it. It is that the high valuation part of asset classes, right? And that is really across equities, across credit, everywhere, right? if we look, and even if we look at junk bonds, we've just heard it from Danny, look at dollar high yield. Dollar high yield cash bonds are trading some 140 basis points above the tights, above the cycle tights from last year. That is pretty much nothing, right? So there is a lot of space to go. I think the way we've got to think about QT is almost like it's been acting, and QE and easy money liquidity, it's been acting as this sort of valuation anchor over the last 10, 12 years. And now this anchor is being taken away, and we're all sort of swimming in the sea without any direction, right? Now we don't have this anchor anymore, and we don't really know where we're going. And that, of course, really leaves that part vulnerable that was exceeding any kind of reasonable earnings or fundamental expectations.
So what does that mean, Max? Where do you want to buy in right now to, I guess, protect yourself from what could happen?
Yeah, I think parts of, we've just talked about it, right? In the previous segment, parts of emerging markets, particularly on the equity side of things, I think do make sense with some China reopening, with perhaps a bit more broad-based stimulus from China coming through. Another thing is still energy. We still are overweight energy because we still do believe that really supply is so extremely tight and demand is not yet sort of really falling off the cliff. We haven't really come to sort of the pinch point where really consumers are giving up and then sort of oil falls off a cliff. We haven't reached that point yet. So it's energy, it's emerging markets. I do believe that perhaps, you know, even in fixed income, parts of European fixed income with that yield increase have become a little bit more attractive. In equities, it's also high dividend yields, right? High dividend payers, for example, low beta, low minimum volatility equities against the high betas. That's where there is not enough of a slowdown priced in.
But does the ECB need to firm up plans to ward off some kind of bond market stress, and will they?
Well, I do think that, you know, we're probably going to get more comments around perhaps faster rate hikes. That's fine. Yes, absolutely. But what we should bear in mind always is that the inflation picture in the Eurozone looks dramatically different from the US. In the US, what we have seen in the last couple of months is that inflation has become a little bit more entrenched, with services inflation really sort of creeping higher month over month over month. Whereas in the Eurozone, it is still very largely driven by, you know, by energy related components, by food price components. And we haven't seen that sort of spillover into broader based categories yet, right? We haven't seen that yet. So in a sense, even if the ECB was going absolutely crazy and was saying, oh, we're going to start QT now and all these sorts of things, well, they can't fix the energy crisis. They cannot solve 2 or 3 decades of a pretty malfunctioning energy policy in the Eurozone. That is not the ECB's mandate, and that is, frankly, not in the ECB's tools.
But Max, what does that mean? That actually we're going to have a disconnection with reality when it comes to energy policy, or will it just quicken the transition?
No, I think with regard to the ECB, it means that perhaps towards the end of Q3 and from Q4 and first half of 2023 onwards, when we do see base effects in energy prices really coming down, it probably also means that people will realize that the inflation picture in the Eurozone has been much more commodity driven and hasn't been as broad based. And that will give a bit of a reprieve then again to the ECB and also versus other central banks. And it will then sort of really make people realize that it hasn't been as broad-based of an inflation increase in the Eurozone as we've seen in other areas of the world.
Max, thank you so much. Max Kettner, the multi-asset strategist at HSBC, joining us this morning. Now, coming up, Tory Revolt, the UK Prime Minister Boris Johnson, will face a no-confidence vote tonight. We'll return to Downing Street with the latest in about 15 minutes from now. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's focus on the UK after that vote of no confidence has been announced for this evening. Boris Johnson will face a leadership vote in his ruling party on Monday evening. The vote starts at 6 p.m. and we're expecting also to have the results later on this evening. Now Rishi Sunak, Liz Truss say they will support Johnson in the vote, but remember, for all of the cabinet's loyal tweets of support for Johnson, it is a secret ballot. Our Kitty Donaldson, our UK political editor, reminded us of this. If you look at the FTSE, it's not really perturbed by this vote of confidence because it's something that's been talked about for weeks and weeks and weeks. Sterling, pretty much the same. If you look at cable, 125.67. Again, this vote of no confidence was expected, and if you look at bookmakers, are expecting a 67% chance Boris Johnson will have the majority. Coming up, Tory revolt, the UK Prime Minister, and the vote of no confidence. We're live in Downing Street with the latest. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Boris Johnson will face a no-confidence vote tonight after an announcement by the Tories' Graham Brady this morning. The PM faces a revolt from his own party. Hiring bounced. Stocks in Europe open in the green, while U.S. futures add to gains after the strong jobs report on Friday. Jane Fraser of Citigroup tells Bloomberg a recession would be tough to avoid. And back in demand, WTI climbs the highest level since March after Saudi Arabia boosts oil prices more than expected to customers in Asia. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Wave Financial, the digital asset investment manager, sought to grab the attention of yield-seeking investors with the launch of a stablecoin fund in early May. In today's high inflation environment, the fund's target yields of 8 to 12% may seem very attractive to the market. But since the launch, the crypto world has been rocked by the spectacular demise of stablecoin Terra. So for a discussion on stablecoins and, of course, Wave Financial, we're joined by the president for International. He's Matteo Dante Peruccio, a veteran of the buy side. Matteo previously served as the chief executive officer of Pioneer Investments and on the board of Jupiter Asset Management. So Matteo, as always, thank you so much for joining us. I have a million questions to start. Have you seen a lot of redemptions actually in Wave following the demise of Terra?
Not at all, no. We were very fortunate actually in the fact that we had a positive outcome from, believe it or not, from the whole Terra situation in the sense that we were able to liquidate any positions we had with really, really minimal losses. And that was really because we were so deep and we saw some indicators very, very early on.
So, Matteo, what does this tell us about, is it that the believers will always believe, or that the market is not reading the signs right? Like, what's the longer term impact of something like Terra?
Well, I think I and we have always been big believers that this is it's a young industry that needs to go through the phases. I mean, I have spent a lot of the years in the hedge fund industry, and people have short memories and forget the ups and downs of that industry, the culling that happened, various economic cycles. And I think this is a very young industry, and we've got to see it go through these difficult moments for it to get stronger. And so I think this is actually, when you think about it, no government intervention was required. People felt the pain. The system's back. The other stable coins are performing as they should. So I think it's actually a very healthy event.
So is it a healthy market correction? What would you call it?
Well, I think it's an indicator that the Terra in specific is an indicator of what was really a flawed algorithm, a flawed program. So I think what it shows is that in a young industry, you're always going to have new entrants that may be not robust and will fall by the wayside. But the more thoughtful, rational, stable coin structures like the fiat-backed and the crypto-backed are performing as they should. They're at par.
Were you affected by Tether actually losing its dollar peg?
Yeah, so for our fund and the way that we manage money, that we think about it from bridging that traditional over to the crypto industry. And the way we do that is we use stable coins as really simply the digital dollar vehicle in order to invest in opportunities. So we're not really investing in stable coins. Stable coins really don't have an investment thesis other than to act as a digital dollar, like a credit card represents a physical dollar when you go into a store. Same sort of thing.
But so did you have to downmark some of these, or were you able to redeem them at $1?
We liquidated any exposure we had to Terra, so we didn't really get affected by that. So we used USDT or other stable coins, which remain pegged at the dollar in order to make our investments, in order to generate yield for clients. So yeah, no, we didn't really have any major impact from it.
So Matteo, how do you see this regulation going forward? What do you think will be regulated? I mean, we're looking at hundreds of pages of regulation.
It's specific to stable coins?
Yeah.
So actually interesting, I'm sure you probably saw, but Japan came out with an announcement for the first time regulating stablecoins. I think we're going to see two different kinds of regulation. One is focusing on who can operate, what operators can actually operate in this sector and the various instruments, and then what instruments should be regulated. So stablecoins, Japan took the approach of banks, money transfer agents, and certain types of regulated entities, and hence that's why we've always been. Wave was founded as the first regulated financial advisor in crypto in the U.S., and we're SEC regulated. So we've always believed that that's going to be a key point. But I think going forward, we're going to see a lot more regulation coming into place, and we welcome it because that's the only way institutional capital is going to come into this.
But so you had Japan first. I know the UK is also looking at things. Do you think it's first in Japan, UK, and then rolls out in other countries?
Yeah, well, for stablecoins in specific, it's hard to tell. The most friendly crypto environments from a regulatory perspective so far in Europe is certainly Switzerland has been pretty avant-garde. Germany has been moving. The UK has been lagging behind, frankly, but it seems to be accelerating now and focusing a bit on stablecoins. So for stablecoins, I think we'll probably see the US and the UK come through with some stablecoin regulation.
Matteo, when you go and speak to investors, actually, what do they most misunderstand about Wave or about stablecoins?
Well, I think in general, what they misunderstand the most is this term cryptocurrencies, and I think it's a misnomer.
Because it's too wide?
Because it's so wide. I mean, it's like saying hedge funds. What does that mean, right? Long, short equity, merger arb, CTAs, they're all very different strategies. So when we talk about stablecoins, I think the general public that's uneducated misses the point that stablecoin is really simply, the way I explain it is, like I did before, a credit card. Yep. You need to turn dollars into an electronic means of payment through the credit card when you go into a store. The digital dollar or stable coins are simply a way in order to interact in the broader ecosystem on blockchain but staying pegged to the dollar.
You know what I hear a lot from hedge funds is that they don't have a problem with stable coins, but they don't want it to be called stable coins because they haven't been stable. Is that a fair criticism? Does it give you more supporters if it were just called something else?
I don't think so, actually. I don't think that's a fair criticism because I think, when you look at, again, the largest and most significant, being USDT, Tether, they are stable. I mean, they vary very little. They function through the crisis. They continue to function, and they're really. I mean, maybe the name isn't the best, but I don't think it's inaccurate.
All right, Matteo, thank you so much. That was fun.
It was a pleasure.
Let's see you back on in London. Matteo Dante Peruccio there, President International Wave Financial. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Ukrainian President Volodymyr Zelensky has visited troops in a southern region occupied by the Russian army where fighting is ongoing. The UK, meanwhile, says it plans to send rocket systems to Ukraine that will let it strike locations as far as 15 miles away, joining the US, which has made a similar pledge. That was last week. This as explosions were reported in Kyiv over the weekend. Now, the U.S. Commerce Secretary says it may make sense to lift tariffs on some Chinese goods as a way to tame inflation. Gina Raimondo told CNN the president is open to removing the tariffs which were imposed by the Trump administration on about $300 billion of imports.
Steel and aluminum, we've decided to keep some of those tariffs because we need to protect American workers and we need to protect our steel industry. That's a matter of national security. There are other products, household goods, bicycles, etc., and it may make sense.
Now to the big story in the UK. Boris Johnson is to face a leadership vote in his ruling Conservative Party following a series of scandals, including becoming the first sitting Prime Minister to be found to have broken the law. The vote will take place for 2 hours from 6 p.m. this evening after 15% of MPs submitted letters demanding a vote. Calls for Johnson to step down have intensified since a report was released on illegal parties at Downing Street during the pandemic. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Leanne and I need to catch up on the Jubilee, the Platinum Jubilee. I know we were all both with bunting and dogs outside, and it was fun.
Oh, I just thought it was absolutely brilliant, and I just don't think anyone does pomp and pageantry like the British, do they, Francine? Just seeing all those people on the Mall, having a look at the golden carriages that went past, and I must admit something, lots of dogs out dressed in Union Jack gear, wasn't there?
Leanne, I almost, but I held back because it would have probably ended up in divorce. But next time, the next Jubilee, Lupa will be there with the crown and the hologram. I mean, look, what the UK does very well, the French are also very good at pomp and pageantry, but it's also making it cool. I have to say the concert was smashing.
Oh, it was smashing, wasn't it? And to Queen to open the concert. But let's not even talk about the concert. What about Paddington Bear with the Queen? Was that not the cutest thing you've ever seen? I think it brought a tear to my eye, and it was such a great place to start it, just showing us her sense of humor, really, because it was all about family coming together.
Yeah, such great stories from Her Majesty the Queen. I've seen that clip about 155 times, 145 times more than I care to. Leanne, thank you. Coming up, globally, there are now almost 20 million passenger EVs on the road. Mathieu Bonnet, the chief executive of Allego, one of the biggest public EV charging companies, joins me next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Boris Johnson will face a confidence vote this evening. The Conservative MP, Graham Brady, announced that Tory MPs seeking to oust Johnson have secured the 54 letters required to force a vote, which will take place from 6 to 8 p.m. this evening.
I notified the Prime Minister yesterday that the threshold had been reached, and we agreed the timetable for a confidence vote to take place. And he shared my view, which is also in line with the rules that we have in place, that that vote should happen as soon as could reasonably take place, and that would be today.
Well, we're joined again by Lizzie Burden, who's outside Downing Street. So, Lizzie, a vote of Johnson's leadership will take place this evening. How likely is it that he wins it?
Well, Francine, you can see the bunting still outside Downing Street after the Queen's Platinum Jubilee weekend, but what a hangover to wake up to today. The Conservative MP, Graham Brady, has announced that you'll see this no confidence vote tonight between 6 and 8 p.m. That's because he's received 54 letters calling for this vote of no confidence in the Prime Minister. But how likely is it that Boris Johnson will go? Well, there's a huge difference between 54 and the 180 votes that it would take to oust the Prime Minister. Remember, his predecessor, Theresa May, survived this stage, and actually it was 6 months before she resigned. So the hope among Johnson's allies will be that this vote actually unites the party and puts the issue to bed, at least for the year, that it would grant him of a grace period post the vote if he wins it.
So, Lizzie, what happens if it doesn't actually unite the party?
it would be Boris Johnson's time to go. There are a list of runners and riders to replace him. In fact, Liz Truss, the Foreign Secretary, and the Chancellor Rishi Sunak have come out in support of the Prime Minister. Rishi Sunak, though, has slipped down the runners and riders list since the very unpopular cost of living crisis budget and the revelations about his wife's tax affairs. Liz Truss hasn't thrown her hat in the ring about taking over from Boris Johnson. Interestingly, in terms of how this will impact the markets, Viraj Patel from Vanda Research says that the no confidence vote tonight will be a non-event unless it brings forward the risk of an early general election. So we'll have to see how strong Boris Johnson comes out of this vote tonight.
Thank you so much, Lizzie Burden there at Downing Street. We'll have plenty more throughout the day, and then, of course, we'll be live with you when the vote starts and when we have the results in later this evening. Now, there are now almost 20 million passenger EVs on the road around the world, and according to BNEF, there are also another 1.3 million commercial EVs, including buses, delivery vans, and trucks, and over 280 million electric mopeds, scooters, and motorcycles. Well, joining us now for a deeper look into the EV landscape is Mathieu Bonnet. He's the Chief Executive Officer of Lego, one of the biggest public EV charging companies. Mathieu is also president of ChargeUp, which is the Association of EV Charging Industry. Mathieu, what a great treat to have you first here on TV. So when you look at the EV charging model, is it too slow? What can we do better? We see the EV as what will save us from climate change, but what does it mean for charging stations?
Yeah, first of all, thank you very much for hosting me, Francine. I'm very happy to be here. Yes, we are in a great industry, in a great growth. So we need to execute now, and we need to put chargers in the ground. I think that all the policies are pushing right now on that with the European level, in UK as well, and we are now building this infrastructure, and we are one of the leaders in this space.
Mathieu, I think you've changed actually your focus from public slow charging to very fast charging. Like, what do people want? Is it like my iPhone where it needs to be fast, otherwise I won't pay for it?
Well, first of all, we need to charge as many cars as possible. So we need to provide energy, and we need to do it quickly. So that's the reason why we slow charger. It was slow, so we needed to increase that. So that's the reason why we shift to fast and ultra-fast charging.
So you're listed in the U.S. What does
Yes.
that mean for some of your contracts in the U.S.? How much scale-up can you see in that country?
So first of all, we are focusing in Europe, but our investors are in the US because they are quite interested to see what's going on in Europe, and Europe is far advanced compared in the US with EVs. So that's the reason why they're very, very interested by what's going on in Europe.
Mathieu, what's your biggest challenge right now? So I keep on hearing a lot of believers and saying, look, we need to fix climate change, we need to have more EVs, but they say, what do we do with the batteries afterwards? Are we going to have a problem in 5-10 years that some of these charging stations, can't be recycled? Like some of the longer-term impact of these EV charging stations.
That's true, Francine, that we have some question about the future, but now our main challenge is to build the infrastructure to charge the cars. And I think in 5 or 10 years, we'll have the capacity to recycle all this, and we have already technology to do that. So I'm quite confident we'll make it, and we will decrease the price of the batteries to be able to do that as well.
And do you charge a Tesla in the same way that you charge a Fiat 500 green car?
We can do it now in Europe. We do it because we have the same plug, which is not the case, by the way, in the US. So that's the reason why it's very, very easy and handy to charge and to use an EV for any EV driver.
Mathieu, what's the question you get asked the most by investors? Again, you can have an EV charging station, but to be green, it depends on when this energy comes from.
Yes, so that's the subject, because if you use coal plant to charge your car, you will emit twice as much as the last fuel standard in Europe. So that's important to be sure that we can get some green renewable energy or CO2 free energy to do that. That's one. Second, we have always some question regarding the supply because we have some constraint, but we can manage. We have room and we need to schedule, and I'm quite confident that the industry now is pushing as hell, I would say, to make it happen.
Do you have enough support from policymakers? When you look at the grid, the infrastructure, do you have, I don't know if it's subsidies in place, or do you feel that actually the expansion phase is real and it's here?
Yeah, I do believe that in all Europe, in UK, in the EU, we have a very big push. We have the 25 policy to do that. We have the AFIR, the Alternative Fuel Infrastructure Regulation that will be in place next year, probably. So we have a very strong policy push in order to make it happen right now.
Do you think you need to be taxed differently, or at least there should be a change in tax for electricity to support your industry?
I think it can always help to do that, but I think given the price we see now with the fuel, I can tell you that it's much cheaper to charge, even on ultra-fast charging, than with your fuel. It's between 25 and 30% lower to charge on our ultra-fast charging stations.
I guess the cars are still more expensive.
But we have an upfront cost regarding the cars and the battery cost.
Mathieu, thank you so much for joining us. Mathieu Bonnet there, the Chief Executive Officer of Allego. Coming up, Elliott Investment Management is seeking $456 million in damages from the London Metal Exchange over its move in March to cancel nickel trades after a massive short squeeze. We'll have plenty more on that story next, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Paul Singer's Elliott Investment Management is seeking $456 million in damages from the LME. It follows the exchange's move in March to cancel nickel trades after a massive short squeeze. Well, joining us now is Bloomberg's industrial commodities reporter. He's Martin Ritchie. Martin, thank you for joining us. So the LME has said it will contest the claim vigorously. What has the LME actually already said about those events?
Yes, well, this relates back to those crazy 18 minutes in March when there was a massive short squeeze on nickel that sent prices up over 100%. The exchange suspended trading and then cancelled the trades on that day, which sparked immediate pushback, immediate blowback from a lot of market participants who thought they were in to make a huge amount of money that day. As you said, the LME has already said the claims are without merit and it will vigorously defend. Now, Elliott, which is suing for $456 million, said that the action to cancel those trades was unlawful and a violation of its human rights. If you also go back to that time, the LME came out almost immediately, and the CEO, Matthew Chamberlain, I think, was on Bloomberg that day, saying, that it had to cancel those trades because the market was simply not functioning properly on that day, that the trades were so chaotic that the losses sustained by some parties would have caused an existential crisis for some of its clients.
Yeah, I mean, I guess the problem, I mean, Martin, I hear so many hedge funds saying, well, it's just unacceptable because then it means that you can't trust the trade and you probably lost money if you were about to make it. Martin Ritchie there with the very latest on the LME and its possible demise. Now, we're getting a lot of breaking news, of course, out of the UK. The UK definitely in the focus with that no confidence vote. We know that Mr. Sunak, the Chancellor of the Exchequer here in the UK, but also Liz Truss, say they will support Johnson. The pound extending gains, the FTSE 100 also climbing. Now, the pound overall has been shrugging off UK political turmoil for now. Traders definitely focusing on the upcoming meeting by the European Central Bank this week and also the Federal Reserve and the Bank of England next. Now, certainly in today's trading session, it rose at the back of lower yields, money markets pricing in 150 basis points of BOE tightening by the end of the year. So Boris Johnson facing this leadership vote in his ruling party. It starts the vote at 6 p.m. London time, and then we'll still have the results later this evening. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, K-Lines in New York. Our Anna Edwards will be here in London. We'll also be going live to Lizzie Burden outside Downing Street. I wonder what Larry the Cat makes of all of this. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. it means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
I know that even with today's good news, a lot of Americans remain anxious.
Certainly, we know there's work to do. We know we're still dealing with inflation. Overall, the picture is still a very stretched economy.
The recession is certainly not our base case that there will be, but it's not easy to avoid either.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, June 6th. Our top stories today. A crucial test in Parliament for Boris Johnson. Rebel members of his Conservative Party force a confidence vote following a series of scandals. Oil rises after Saudi Arabia raises the price for Asian customers by more than expected. It's a signal the Saudis are confident in demand as China emerges from coronavirus lockdowns. And mixed messages from Elon Musk. Is he cutting jobs at Tesla or adding them? The confusion underscores the sometimes erratic nature of his leadership. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, a lot of politics to talk about where I am, the strength of the economy, the jobs market, and rebound in stocks. Very topical where you are.
Yeah, and of course, the strength of the economy in China in particular has been a global focus, given what a heavyweight it is in the global economy. And there are some more optimistic signs on that front that are emerging as it relates to the COVID-0 policy. That is why we saw stocks higher broadly in Asia overnight. The MSCI Asia Pacific Index overall was up about 0.6%, and that was a move led by Chinese equities. The CSI 300 higher by the better part of 2 full percentage points as you see restrictions easing in the capital city of Beijing. Now, that helped offset some of the mixed data we got out of China overnight, including cash and services PMI, which shows they contracted again in May. But the idea may be that the worst of the impact of COVID-0 on the Chinese economy is indeed over. And that kind of sentiment is lifting the Chinese yuan, specifically the onshore yuan today, stronger against the dollar by about 0.25%. We're trading in and around 664. And then the Japanese yen also gaining a little bit today against the dollar, Matt. The interesting story here is that it's trading at 130.71. It has failed to break a fresh 2-decade low, and some strategists saying that means now that traders are closing out some of those short positions and taking a little bit of profit there, Matt.
All right, well, you can buy a heck of a lot of yen for $1. That's all I know. Right now, we're looking at big, strong gains for futures. That's all about the China story that Kaylee was just talking about. So it looks like, at least for the markets today, the story is restrictions lifted, risk on. So that's why you see gains in futures here. We also did have a big drop in the cash trade on Friday. The U.S. 10-year yield right now rising to 3%. The question is, will we get there and go beyond? It used to be there is no alternative for stocks. Now there is kind of an alternative here. Certainly a 3% yield is nothing to sneeze at, and investors are going to be buying that and holding the yield down, maybe locking it around that level because of the rise. NYMEX crude up again, and this is TI right now, almost 120, 119. $119.21 a barrel right now as the Saudis raise prices for those in Asia. The U.S. may look to try and get more oil from places like Iran, which have spare capacity that clearly isn't being used. We also see a lot of spare capacity in the UAE and Libya, which is obviously harder to get to. And then Bitcoin up 5% today to 31,411. So it's a level that we've seen last week. But the question is it really going to move out of this range? Or there was a great story in the Bloomberg terminal yesterday saying miners are now selling tokens at a pace we haven't seen for months. So could that cap it? Anna, what are you seeing in terms of European movers?
Yeah, well, as S&P futures appear to be on a bit of a rebound from Friday's losses, Matt, we see here in Europe some strength in the European session. The FTSE 100, of course, catching up from 2 days of losses, but doesn't actually look all that, 2 days of market closure, but doesn't look all that out of step from the broad risk-on sentiment that we're seeing across these markets here in Europe. Yes, the data from China is helpful, but this is really broad-based. We have only 2 sectors in Europe in negative territory this morning. So it's broadly markets moving higher. Basic resources, one of the sectors that is moving higher. I've got that one on my board for you, but basic resources benefiting from the copper price on the rise. So the copper price up by 2.5%. And some of this is, as Kaylee was pointing out, some of the reopening story coming through from China. Even if we got some PMIs out of the Chinese economy that maybe gave us something to think about, still in contraction territory on those services numbers. But nevertheless, we're looking on the bright side, it seems, in terms of global growth and what they're doing in Beijing in reopening there. Here is the UK story I want to mention. We are up by 0.6% on the pound. There was a time before the Brexit vote when politics and who leads the Conservative Party in the UK in particular, because they are the governing party, when that would be front and centre for people watching currencies. That would be what drove the pound. Today is a bit different now. You know, things are different now. Now we're outside the European Union. There isn't quite that same focus on a hard or a soft Brexit, of course. And now maybe it is kept quite ring-fenced and doesn't necessarily influence. What does influence the pound is expectations about the Bank of England and the state of the UK economy, and expectations of another hike from the BOE have been building, and we're pricing in more hikes, and so as a result the pound is going higher. We'll think more about the politics though, because it is worth thinking about in a moment. Just Eat Takeaway, this is a company up by 9% today. There was some newspaper coverage, Kaylee, over the weekend that said this company was brought Grubhub, of course, not long ago, that the co-founder of Grubhub might come back to try and buy that asset back. So we'll see whether that ever comes to pass. Kaylee?
All right, well, that is definitely a story we will follow over the coming days. Now, as for what else we will be following in the week ahead, we'll get more data out of China. Anna and I mentioned some of it that we got overnight, but throughout the week, we'll be getting other data points, including trade and CPI figures. Then the Apple Worldwide Developers Conference will be taking place today. Bloomberg's Emily Chang will be live there from Cupertino. Plus, the Bloomberg Technology Summit kicks off on Wednesday with a lineup of key CEOs at a crucial moment for the industry, including Amazon's Andy Jassy. On Thursday, we'll get the ECB rate decision. Do they tee up a July rate hike, and of what size are we talking about? And finally, we get the all-important U.S. inflation data in the form of CPI on Friday, Anna.
Yeah, has that peaked, or will we get a reminder that no, maybe not, maybe higher prices to come? Let's get back to the UK politics then. Rebel members of Parliament from Prime Minister Boris Johnson's Conservative Party have forced a confidence vote today in his leadership. That follows a series of scandals. Let's get more from Bloomberg's Lizzie Burden, who joins us from Downing Street with the latest. Lizzie.
Yes, Anna, you can see the bunting still outside number 10 Downing Street after the Queen's Platinum Jubilee. What a hangover to wake up to. The chairman of the 1922 Committee of Tory Backbenchers, Graham Brady, has announced that he has received the 54 letters calling for a vote of no confidence in the Prime Minister. So we'll get that vote tonight between 6 and 8 p.m. London time. But it isn't an automatic trigger for Johnson to go. Remember, his predecessor, Theresa May, survived this process. It would take 180 votes to oust the Prime Minister. And the hope within there and among Johnson's allies will be that this vote puts the issue to bed. The risk for markets is that Boris Johnson survives and calls an early election. And according to Viraj Patel at Vanda Research, that is the only situation in which this will matter to markets.
All right, Lizzie, thanks very much for joining us. Lizzie Burden there reporting from outside number 10 Downing Street. Let's get back to oil right now. Extending gains after Saudi Arabia signaled confidence in demand. The kingdom raised its crude prices for Asian customers more than had been expected. Let's get more with Paul Wallace, who leads our commodities coverage in the Middle East and North Africa. So, Paul, what do we know?
Hi, Matt. Yes, this was a bigger than expected increase by Saudi Aramco. It's quite an aggressive move by them, and it very much signals that they see strengthening demand in Asia, where they send about 60% of their exports. And that's as countries such as China and Malaysia and Singapore ease coronavirus restrictions. We had that sort of affirmed, if you like, by Vitol, the world's biggest independent crude trader, yesterday. Its head of Asia, Mike Vitol, said on a podcast yesterday that he said it's quite extraordinary the rebound in demand that he's seeing in some of the bigger economies and wealthier economies in Asia. He says there is a bit of a divide emerging between the richer and poorer nations. In the poorer nations, these high crude and fuel prices are leading to demand destructions, but for the better off ones, there's still very much evidence of strong pent-up demand as these pandemic restrictions ease.
Paul, thanks very much. Bloomberg's Paul Wallace reporting there from Dubai on the latest on oil prices, 120 the handle on Brent. Now, life in Beijing takes a step closer to returning to normal today as the capital rolls back COVID-19 restrictions. Public transport resumes in most districts, allowing workers to return to the office and restaurants to start dine-in services. Let's get more from Enda Curran, our chief Asia economics correspondent, keeping an eye on what is going on in China very closely. Enda, is this the dominant narrative, do you think, for China right now, or is it the PMIs, which in some cases were disappointing?
Well, the great reopening of the economy does offer hope that China is going to get back on an even keel. And like you mentioned, Beijing easing up its restrictions there, with cinemas reopening, albeit at 75% capacity, restaurants allowing dining in, and public transport getting going again. Cases in both Shanghai, infections in both Shanghai and Beijing are very low now, and it does sort of suggest that China is moved beyond this phase of restrictions and lockdowns, and the economy will start to mend. But we did get a warning of just how far the economy has to go today. Like you mentioned, we had services PMI. It remains deep in contractionary territory. Third month of contraction. Actually, employment also falling in that sector, and that's underscoring just how far the recovery has to go. We will get data later this week showing the trade side of things that might show an improvement given the easing of restrictions around Shanghai port. But when you take it all together, the underground activity still has a long way to go, even with the reopening of Beijing and Shanghai.
All right, well, it looks like China's certainly in the driver's seat for markets today. Enda, thanks very much for joining us on that. Now let's get to maybe some water cooler talk. Tesla CEO Elon Musk sent staff, investors, and electric car watchers on a 3-day roller coaster ride with conflicting messages about potential job cuts. Let's get the latest with Danny Berger. So, Danny, what is Elon saying now?
I'm glad you asked me what he's saying and not what he means, because that is something I don't think anyone really knows except maybe Elon himself. I'm not even sure he does. So, of course, just a quick recap. Friday, Reuters gets a hold of an email that Musk sent out saying that he has a super bad feeling about the economy. They need to freeze hiring, potentially cut 10% of staff. Tesla falls about 9% in the session, its worst daily session in over a month. Then on Saturday, Elon Musk tweets out this: total headcount will increase, but salaries should remain fairly flat, which seems to fly in the face of this email coming out saying that they would cut staff. And also, adding to the confusion, today there was a Chinese website that said that Tesla was hiring pretty significant numbers in China. So a lot of mixed messages, but of course it's not unusual for Elon Musk to tweet these kind of things. And of course it is important not just for the direction of EV makers, but also for the tech story, because there had been this concern that executives didn't feel good about the economy and start cutting back. Well, we do see Tesla after that up 4.2%, which is perhaps fitting for Tesla, that it is up that much pre-market. Dan Ives over at Wedbush basically explaining it, saying, look, he tried to send a message to his investors that backfired. So this is him just trying to walk some of that back, Kaylee.
All right, Bloomberg's Danny Berger, thank you so much, as always. So we have Tesla moving higher in pre-market. Let's take a look at some other stocks that are doing the same in early hours here in the U.S. The big one moving higher today is DiDi Global. This, of course, is the Chinese ride-hailing company that is listed here in New York. It does plan to delist eventually, maybe. But the good news for this stock coming today from a Wall Street Journal report that China's probe into the company looks set to maybe end as soon as this week. And that would mean that the app is re-available on mobile stores in China China. That is giving a massive lift to this stock, up more than 50%, 52.4% in fact at this point in early hours. Another stock related to China moving higher is Yum China. It, of course, operates chain restaurants like KFC and Taco Bell and Pizza Hut. As we are talking about the Chinese reopening, which Enda Curran was just detailing for us, that is good news for restaurant operators in that country. It's up about 5%. And finally, Matt mentioned this. We are seeing some pretty healthy gains across the crypto space today, and that is true of crypto-related equities as well. Coinbase Global, the exchange, up about 6% before the bell, Anna.
Coming up on this program, then, placing bets. Investors are making calls on the chances of a U.S. recession. We will get the view of Jamie Fahy, head of global macro strategy at Citi. And all about QT, we'll bring you the results of our latest Markets Live Pulse survey. What do respondents think about QT? Plus, the Fed is starting to have an impact, according to Larry Summers. We spoke with the former Treasury Secretary on Wall Street Week.
We're seeing a little bit of indications that some firms are no longer reporting the kind of huge labor shortages that they were before. We're seeing some indications of inventory buildups, but I think overall the picture is still a very stretched economy.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Welcome back to Bloomberg Surveillance. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller with Kaylee Lyons here in New York, Anna Edwards with us out of London. I'm looking at a chart that shows crude prices just continuing to climb here. As we showed you just a few minutes ago, Texas Intermediate is looking at $120 a barrel, and Brent, the global benchmark, is pushing even higher. Kriti Gupta, markets correspondent for us, is back from an extended vacation, and man, I missed you.
Thank you. It's been 4 days, but the separation anxiety has been
like
very
it was
real.
weeks and weeks and weeks, but no, you're back. So all right, oil higher. It's really interesting because it's on the back of good news, right? The economy in Asia is kicking off. On the other hand, it's not great for the administration. Politically, it's tough to deal with, and we're going to try and get more from Iran now?
Well, let's start with the administration, because over the weekend you had, once again, gasoline prices at yet another record, and it's really kind of the story that continues there for the consumer. But if you talk about it from a kind of markets perspective, I think the point that you had at the very beginning, which was, is this good news or is this bad news? Because for so long we've said, well, this is bad news because of the supply constraints, because of the issues over in Ukraine as well. But this kind of looks like good news, and here's where you can really tell in terms of what's actually driving the dynamic. It's not just about the oil market, it's what does the oil market say about the other markets, the S&P 500, the bond market. If you actually look at the correlations, which I love to whip out my 40-day correlations, is if you actually look at the S&P 500 and oil, that correlation is now positive. That's a normal correlation, where if you have higher oil prices, it signals higher growth, and therefore, in theory, supports a higher rally in the S&P 500. We haven't seen that for quite some time, simply because of all the inflation fears, which tells you, in the stock perspective, if you look at oil, what's driving the story is the growth story, and that's how you can kind of detective work your way back to whether or not this oil rally is a good thing.
Well, let's talk about the equity market rally as well. What are you looking for as a signal as whether this is just a bear market rally or one that's actually going to stick around?
Well, I think the key question, and I wish I had the answer to that because I'd be making a lot more money, but I think the key question to that is capitulation or not, right? That seems to be the buzzword that you hear all the time, but I think what a lot of people aren't asking is, do you actually have to capitulate to start to see this kind of bounce back? And if you saw, well, the week before I was off on vacation, I think almost a 7% rally, which came back down. But if you start to see a lot of these export concerns kind of get abated from China, for example, their reopening, it's not just about the Chinese growth story and what it means for the broader economy, but can those exports, can those supply chain issues that we've been talking about for a year actually get out of Beijing and Germany, I should say, which is another major issue as well. And right now, it kind of seems like it's the idea, not about growth, but about the supply chain issue that gets a little bit better. And from a fundamental perspective, I would say that's the signal a lot of people are waiting for. At least the theory of that, whether that actually happens, is a different story.
And Chrissy, what about signals on the underlying economy? It's easy to focus on the comments of Elon Musk or Jamie Dimon, but when we survey economists, they're still talking about a soft landing for the U.S. economy.
They're still talking about a soft landing. I think what's interesting and has perhaps fallen to the wayside a little bit is the wealth effect, which continues to be there. As you start to look at consumer sentiment data, sure, it's at a decade low, but if you actually look at their spending patterns, people are still spending. They are still seeing credit card data, for example, support the idea that people are still looking to spend, whether it's for their travel, whether it's for actual goods. It's still there. Perhaps, yes, it's slowed, but it is still there. And I think when you're looking at whether or not we're actually going to hit a recession in the next couple of quarters, I think we should specify the time horizon, because recessions are inevitable. I think that's really where you have to look. Can the American consumer still spend? And right now, the answer is yes, Anna.
Chrissy, thanks very much. Yeah, with unemployment at the levels that it is. Bloomberg's Chrissy Gupta with a look at the markets for us. And for more market analysis, check out MLIV Go. That's the function to use on your terminal to keep across the market's live blog. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible, to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. The UK will send multiple launch rocket systems to Ukraine. It's a move that's been coordinated with the US, which is sending similar weapon systems. Ukrainian forces have requested longer-range precision weapons to fight the Russians. U.S. senators say talks on limited gun control measures are slowly moving forward, but a deal is far from assured. Republican Pat Toomey says he feels that the Senate is closer than it's been since he's been in office. Democrat Chris Murphy says one focus is identifying 18 to 21-year-olds that could be a danger and prevent them from acquiring guns. The world's largest independent oil trader says the U.S. may allow more sanctioned oil onto global markets, and that's even without a revival of the 2015 Iran nuclear accord. Vittal says that U.S. may turn a blind eye to the sanctioned oil if it helps lower gasoline prices. And Treasury Secretary Janet Yellen reportedly wanted President Biden's $1.9 trillion American Rescue Plan scaled back by a third. An upcoming biography of Yellen says she was worried about the prospect of inflation, but Yellen disputes the book's claims. And Matt, of course, this is a story that was much discussed over the weekend.
Yeah, I think this is really the talk of the markets right now because it all ties together with the idea of what causes inflation. The White House seems to agree with the majority or disagree with the majority of economists, and how that leads to a recession or not. That's kind of the talk of the markets right now.
Yeah, I wonder to what extent we see a disconnect between the fiscal and the inflation impact. 7, 8, 9% in many parts of the global economy and the well-grown parts of the global economy. More on the markets next. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. A crucial test in Parliament for Boris Johnson. Rebel members of his Conservative Party forced a confidence vote following a series of scandals. Tory lawmakers have become frustrated by what they see as mistakes and U-turns that have led the party to slump in opinion polls. Oil rises after Saudi Arabia raises the price for Asian customers by more than expected. It's a signal the Saudis are confident in demand as China emerges from coronavirus lockdowns. West Texas Intermediate, WTI, is trading near $120 a barrel. And mixed messages from Elon Musk. Is he cutting jobs at Tesla or adding them? Musk's tweets and emails the last few days adding to confusion for investors who are looking for signs of an electric car slowdown. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. Queues, the lines, if you like, the waiting time on electric vehicles still looks pretty robust, Matt, in terms of that particular sector. But I know that in your sights, but also the health of the US economy.
Yeah, I have to admit, I was confused last week when we heard this from Elon Musk because I know personally of many people who have ordered Teslas and are waiting. Of course, the same is true for EVs from Ford and Rivian. I mean, the lists, the waiting lists are still up to a year or even more along. So why would you want to cut? I guess he's talking about salaried workers and not the production staff. But in any case, it's Elon Musk. Right now, S&P futures are up more than 1%, and it's really the China story that is driving markets, right? If they start to open up, that turns on the engine of global growth again. And indeed, you're starting to hear about people allowed to drive again in Shanghai and Beijing. The U.S. 10-year yield rising a little bit, but it's bumping up against 3%. And I think the issue here is that investors are willing to let go of bonds. They're not concerned about the economy. But then you've got especially big institutional pension funds, for example, saying, oh, 3% is good, so I'll snap those up. And that holds it in that range. NYMEX crude up to 119.40. This is something we've been talking about a lot today, of course, as the Saudis raise prices for Asia in a sign of confidence in growing demand. There, again, you have the Chinese driving markets. And then Bitcoin is up 5% right now. Maybe a little bit of the volatility is coming back, but we're still stuck in a range here, 31,393. I'm not sure how much longer, Kaylee, I'm going to be having Bitcoin in my market checks.
Well, I think you should keep it because we talk about crypto a lot, you and I. Remember, Bloomberg Crypto, 1 p.m. Eastern tomorrow, Tuesday, right here on Bloomberg Television. We'll be talking about all of the price action. And as Matt says, we're still in the range, in and around 30,000, a little north of it today. But that is still having an outsized move on crypto-related equities in pre-market trading, an outsized influence, I should say. The likes of MicroStrategy and Marathon Digital up about 8% and 6% respectively off of the back of the gains we are seeing for Bitcoin. And where else are we seeing gains? One of them is Tesla. We have been on yet another confusing roller coaster ride with Tesla, this time in regard to the company's workforce. Of course, on Friday, there was the news that Elon Musk has a super bad feeling about the economy, wants to cut 10% of the salaried workforce. Then over the weekend, he says actually the number of salaried employees is going to stay relatively flat. They're even going to add headcount elsewhere. I don't really know where that leaves Tesla, but where it leaves the stock is higher by nearly 4%, so gaining back some of that 9% loss from Friday. Finally, DD Global, the big outsized performer in early hours. Reportedly, China is looking to wrap up its probe into the company by the end of this week. That could mean the app is back on mobile app stores. That stock of the Chinese ride-hailer listed here in the U.S. up 50% before the bell for those ADRs. Anna?
That is 50, not 5. Just, yeah, important to have you say that out loud, Kaylee. Such a big move. Let's have a look at where we are on the European equity markets then. Stocks Europe 600 up by 0.9%. Some of that positivity coming through from China, perhaps, certainly lifting the basic resources sector. Copper prices responding to the same driver, up by 2.5% here in London. The pound on the move, but not for the reasons you might think. Not apparently to do with politics. Maybe markets don't like political uncertainty, but they don't seem too knocked by this political uncertainty we have here in the UK. The Prime Minister Boris Johnson faces a vote of no confidence today from his own MPs. Will he or won't he survive it is not the question that the markets are focused on, it seems. This is more about pricing in further hikes from the Bank of England. Just Eat Takeaway, a food delivery business, up by just over 11% this morning. This is a company that bought Grubhub not long ago, and there's been newspaper reporting over the weekend that suggested that the co-founder of Grubhub might be back to take a look at buying back the business that he previously sold. Kaylee.
All right, Anna, well, let's get back to our conversation about the U.S. economy because it is still on a narrow path to a soft landing. That's according to economists over at Goldman Sachs, Jan Hatzius and the team, talking about inflation, and they say improving inflation suggests the Fed may pull off its rate hike plan without tipping the country into a recession. Joining us now is Jamie Fahey, head of macro strategy, global macro strategy at Citi. So, Jamie, where do you come down on the recession versus a soft landing?
I think ultimately the onus of proof is on those who do claim there's going to be a soft landing. I mean, if you look over the past 30 or 40 years, there's only ever been arguably one soft landing, and that was in 1994. So ultimately, I think this is why the Fed have really admitted that they will be lucky if they get a soft landing at all. And they've been pretty clear that they're going to prioritize lower inflation over growth or the labor market. So to me, I think they'll be very, very lucky to get a soft landing next year. And my base case is that mid next year, the economy really does begin to roll over, maybe before that.
And where do we stand then, Jamie? You're talking there about slowdown in the United States. There are some voices that say that the UK is quite a good place to look to for an example of stagflationary dynamics and what that can look like. Is that, and thoughts about the Bank of England, is it that that's driving the pound higher this morning rather than anything to do with the political turmoil?
The UK is very similar to Europe insofar as we're seeing significant real wage contraction. Consumption is pretty deficient. It's never really recovered to pre-COVID trends. And as a result of that, I think the Bank of England pricing, it looks very full at the moment. Now, obviously, in the short term, it looks like sterling as a currency has been driven by that rate market pricing. But ultimately, if you look further out the curve, 1 year or 2 years, it looks like the market pricing might be disappointed given the overall growth backdrop.
So how many hikes do you think the Bank of England will get to, Jamie?
They've been very volatile. Now, I think if they get 2 more hikes, they'd be lucky, and then they might end up cutting sometime next year, probably the second half of next year, before, if we're lucky, as I say, resuming that rate hike path. But I think ultimately 2 hikes is probably the base case there for the Bank of England.
I want to get back to the United States of America here, Jeff. You know, the The debate over the weekend has been about whether or not there will be a recession in 2023. And you're saying the economy is going to roll over. What does that mean? You know, Peter Hooper says 70% chance of a recession, but I got a note yesterday from Ed Hyman who said we're going to avoid a recession. Where do you fall?
If you look at market implied indicators such as the equity market, that's pricing probably a 50 to 60% probability of recession. If you look at the 2-10s curve or the 3-month 10-year curve, which people like to look at, that's pricing now about a 40% probability of recession over the next year. I have a couple of leading indicators I look at, particularly for consumption. I look at gasoline prices, mortgage rates, and some sentiment indicators. And that's telling me that the ISM or PMIs could move below 50 by early next year, which would be contractionary territory. So I think if you bring all of these in conjunction, you're probably looking at 60 to 70% probability.
In terms of corporate earnings, I mean, how much does, you mentioned gasoline prices, right? Inflation looks like it may have peaked in a lot of areas, but certainly not at the pump. How much does that eat into corporate profits?
Well, if you look at earnings expectations so far this year, it's actually unchanged for this year and for next year. So really all this equity market volatility that we've seen is primarily driven by the Fed raising rates and expectations of real yields moving even higher. So that's ultimately what we're seeing is earnings or PEs derating. Now going forward, if we are going to enter into a recession early next year, these earnings expectations must come off, which means that earnings revisions will be negative. And in that regime, equity market volatility significantly increases. Your expected returns turns negative. But most ominously, the left tail, which is the very large drawdowns, actually opens up. So you can see drawdowns of anywhere between 20 to 30% when you see these negative earnings revisions regimes. And I think we're going to go into that the second half of this year.
Well, you're echoing the likes of Mike Wilson over at Morgan Stanley, who published a new note this morning talking about earnings risk, basically saying that the end of the second quarter earnings season is when we're really going to see the next leg lower for this market. He thinks potentially down to 3,400 by mid-August, but yet I'm still looking at what looks like a persistent bounce back in U.S. equities. Jamie, how much longer can this bear market rally last if that's what it is?
Well, ultimately, what we're going to need to see is more profit warnings from companies and from the overall index as a whole. We haven't really seen that to a greater extent, but I think I would echo Mike's sentiment there in terms of going forward, we will see more and more negative revisions. And then at the meantime, if inflation remains high, the Fed will remain even more hawkish, and that could drive down the index price as a whole.
Jamie, thanks so much. Thanks for joining us. Jamie Fahy joining us there from Citi. And coming up, escaping 30,000, Bitcoin is heading higher after being stuck for weeks. We got reflections on Bitcoin earlier from Matt Miller. We will get to our crypto report next. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
They have to do QT. They do not have a choice because there's so much liquidity in the system.
Liquidity is coming down.
Liquidity is going to become a problem.
We're going to see this withdrawal of liquidity really start to bite.
They have to remove some of the liquidity to stop the speculation.
I don't think the actual slow beginning of runoff is going to cause the volatility in and of itself.
It is expected. It is not a surprise right now.
Without a doubt, we've already begun to see it be priced in.
It is very much in the price right now.
The way that we're thinking about this is obviously the end of easy money.
QT is an unknown.
I don't even understand how QT is going to work either, and I should do, right? I mean, I'm a fixed income guy.
It's going to keep the market on its toes for the time being.
No one does, let's be honest.
That's the latest MLive Pulse survey focusing on quantitative tightening as the Fed begins to roll off its balance sheet. Who understands how it's going to work? The new era of monetary policy could have an impact across all asset classes. According to the survey, tech and cryptocurrencies are among the most vulnerable assets. Mike McGlone, Bloomberg Intelligence commodity and crypto strategist, joins us from Miami. So, Mike, you are one of the most connected people in crypto down there with your finger on the pulse. How is quantitative tightening going to hurt the price of Bitcoin?
Well, Matt, I think the lead-in for this show was perfect because it's taking away the punch bowl to the big party. And the biggest party was in cryptos and all assets. Let's look at the best performing asset in history is Bitcoin. So it should go down the most when we're taking away the punch bowl. But the key thing that I think to think about for the future is it over? And I look at, okay, so we've had a 20% drawdown in the S&P 500, 30% in the NASDAQ. The Fed tightening jawbone is still increasing. Is that all it's going to be? I think it's unlikely. So right now we're in the bounce stage. It makes sense. Just at the end of May, for the first time in 2 years, the S&P 500 and the NASDAQ and Bitcoin reached its 100-week moving average for the first time in 2 years. They're bouncing off those levels. I mean, I'm bullish Bitcoin in the big picture, but in the shorter term, you have to realize the Fed is going to keep tightening until risk assets go down. And right now, we're just in that short-term bounce stage is the way I see it.
So is this going to move us out of the $30,000 range, Mike? Because now for weeks, we've been looking at anywhere from 28 to 31 and change on Bitcoin. And I was expecting, us to hit that level and bounce back higher, but we really have just hit it and stopped.
That's what I think you described. One of the key things that's been happening in Bitcoin for a long time when the stock market goes down is Bitcoin volatility is in decline and the stock market volatility is actually increasing. That trend is very profound for the big picture, and I think the institutional money managers are getting it, and there's bids below in Bitcoin and offers above in the stock market. But for now, look at Ethereum for one example. Ethereum's been a great technical indicator. It's below 2,000 now, and that's been a good resistance. So I think what's going to happen here, Matt, is when this dust settles from this great reversion which are happening, Bitcoin is probably going to settle in and start coming back and doing what it has been doing, outperforming. The question is, where does it build its foundation? It might be 30,000, but if we get another 10% down in the stock market, which is very likely, or the Fed's going to keep raising rates, then Bitcoin will be under pressure. It's where we come out of this, and it's only, where are we now, June in this year? I look at it like compared to 2008. Crude oil, in 2008 peaked in July, and then everything flushed. We're in a similar situation. We're all linked because crude oil going up means more Fed hikes and pressure on risk assets.
Okay, so when you're looking for a signal in other asset classes that looks like it may relate to some kind of bottom in cryptocurrencies, Mike, is oil it? Is that what you're looking at?
Oil peaking, Fed funds rate hike expectations, the one-year curve and futures bottoming. Those are key things I'm looking for. And I think everybody's looking for that sign that the Fed fund futures in the forward curve are not going to go up anymore. That to me is the key thing for everything, for mostly Bitcoin and gold and even the stock market. The problem is it needs the stock market to go lower for the Fed to take out that punch bowl or to actually to take away all those hikes.
Okay, good to see you, Mike. And if we see then crypto dust itself down from all of the chaos we saw around algorithmic stable coins, where is the future of finance built? Is it Ethereum or elsewhere?
Well, that's a key thing, Anna. Ethereum is the foundation for the future of finance. Let's look at the most widely traded crypto on the planet. It's Tether, crypto dollars, stable coins. They are made possible by Ethereum. Now, yes, Ethereum has a lot of competitors, but what's happening with Ethereum is very profound. It's a new technology, but going from proof of work to proof of stake is very significant, but it's also bringing in the institution because it has a key thing behind it, and that's cash flow. It's going to have positive cash flow, like an equity market, if it works well. I think it's going to. There'll be bumps in the road, but that's what's bringing in the institutions. They're just taking a while to get in, partly because of the custody and still a lack of a physically backed ETF in the U.S., but they're trickling out to other countries, Canada, Switzerland, Australia.
Yeah, we're losing out to some extent. Mike, thanks so much for joining us. Bloomberg's Mike McGlone from Bloomberg Intelligence. He follows all commodities but focuses on crypto out of Miami. Tune in, by the way, to Bloomberg Crypto tomorrow. Kaylee and I host the show every Tuesday at 1 p.m. New York time, 6 p.m. in London. This week, we'll hear from the head of OTC options trading at the crypto exchange Kraken. This is Bloomberg.
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I notified the Prime Minister yesterday that the threshold had been reached, and we agreed the timetable for a confidence vote to take place, and he shared my view, which is also in line with the rules that we have in place, that that vote should happen as soon as could reasonably take place, and that would be today.
That was UK senior Conservative MP Graham Brady speaking in a televised statement earlier today. Prime Minister Boris Johnson faces a vote on his leadership tonight after rebels secured enough backing to force a confidence vote. That vote follows a series of scandals. Partygate, of course, is front and center. Joining us now in New York this morning is Rosalind Matheson, Bloomberg's senior executive editor for government. So, Roz, we know at least 54 MPs don't have confidence. A whole lot more than that are needed to actually oust him. What are the odds he survives this?
Well, the odds are he actually survives this vote because, as you say, quite a few lawmakers need to vote against him. So he may actually survive this vote, but where does that leave his leadership? In theory, if he gets through this vote, he gets another year's grace before they can challenge him again. But as we've seen in history, once this starts, it really does start to gather its own momentum. If the result is pretty tight, he might decide on his own that really he needs to step aside, that he's lost the confidence of his party and his lawmakers. But it also won't stop the noise, even if he does continue. So you would imagine this is possibly the beginning of the end of the Johnson premiership.
Yeah, Rosalind, the bar goes from 54 that Kayleigh was referencing there to 180 Conservative MPs who need to be dissatisfied and vote for no confidence in the Prime Minister to trigger a leadership election. So if he does survive, Rosalind, there seems to be a wave of thinking this morning that if he survives, but if he survives by not as much as he would like to, he might be tempted to call an early election. But the most recent polling doesn't suggest that that would go well for the Tory government. Why would that come to pass?
Well, that's right. Well, in fact, before that, we've got another special election to get through. And if that goes badly, that might be a barometer and cause pause for even Boris Johnson to save himself by calling a general election quickly off the back of that. But what we can expect to see is this polling showing that there's really a loss of support for the Tories across the board. Boris Johnson came to power promising that he was going to bring renewal to key areas of northern England. He was going to bring Labour voters into the fold for the Conservatives, and he did that quite strongly, but he's not delivered. And so what we're seeing now is Tory lawmakers have gone back to their constituents in recent weeks. They've had a lot of grumbling, a lot of people saying things are not great at all, and hence we've got now this leadership vote coming later today.
As far as I understand it, the concern isn't really so much that he and his colleagues were drinking beer at work, but rather that he lied about it. And there were allegations that he lied about a lot of the potential benefits of Brexit before that vote as well. Does this change the kind of Brexit that Britain is going to experience if he loses?
Very unlikely to happen. I mean, the interesting thing is that, in a way, he'd gotten through Partygate. The noise on that was dissipating. He didn't get penalised further, and then suddenly we have this leadership vote today. If anything, it reflects more the disquiet over the economy. Like many places, you've got rising costs of living, gasoline prices rising, energy prices rising. People saying, well, where's your leadership on these key issues? He got a bump because of the war in Ukraine, or perhaps he got a grace period because of the war in Ukraine.
By the way,
these are the issues that are coming back.
Is Sunak as unpopular or maybe even more unpopular than Bojo?
Well, that would be the question, right? So if he does go, you get this very kind of sort of protracted, often quite ugly leadership contest where they'll be jostling for position, and none of them are particularly popular. And so it'll be interesting to see, is it Rishi Sunak who puts his name up? Is it the Foreign Secretary, Liz Truss, who comes forward? There's a whole suite of people who will be competing very quickly for that job.
They've all said they'll support Boris Johnson, the Prime Minister, in the vote tonight. It is, though, a closed vote. Rosalind, thank you very much. Bloomberg's Rosalind Matheson joining us with the latest on UK politics. That's it for the early edition. Surveillance is ahead with Tom, John and Lisa. This is Bloomberg.
Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is still a very, very strong and too strong labor market. So we need to see that slow.
We do expect a slowdown in the economy, and I think that that's needed. That's what the Fed wants.
There's nothing that's going to stop them from continuing this march of 50 basis point increases.
They really cannot right now, I think, suggest that they're going to slow. They really need that clear and convincing sign.
Recession probabilities rose the moment the Fed started talking about hiking.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures up 1% on the S&P. TK, what a week we've got coming up.
We've got a huge week coming up, and then 2 weeks in, we've got the Fed meeting as well, but ECB really front and center. And John, what's interesting, after a jobs day, the Monday after is sort of clumsy and dorky. That's the way it is. But to me, the headline today is the jump condition in copper, the optimism of China reopening.
As China reopens and equities push higher, Tom, we push forward to CPI on Friday. Michael Harnett over at Bank of America writing this morning. The summer of Volcker, no fun until the Fed is done.
It's going to be data dependent, and we're going to have to see. I mean, with an 8.3% statistic, what if we overshoot that? What if we come in underneath? And the research notes over the weekend, Bruce Kasman will join us here in a bit with JP Morgan, is an ambivalence. It's like we just have to wait. What do you think, John? You wait till you get past the Fed meeting.
As we wait, we're starting to see those price targets come in just a little bit more. Bramo, we'll catch up with Lori Calvasina of RBC in a couple of minutes' time.
Pretty much across the board, the Wall Street notes seem to come out and say perhaps we've had peak pessimism, perhaps we're a little bit past that, and now we've got to assess what a growth slowdown looks like. The idea of Mike Wilson of Morgan Stanley saying that in the second quarter earnings, we'll probably see companies start to remove some of the fuzzy forecasts and actually downgrade even further what their profits are likely to be, and that will lead to the next leg lower. But this is not a wholesale freakout or a wholesale bearishness that we saw perhaps a couple of weeks ago.
Do you want some good news?
Sure.
Quiet period for the Fed. It started.
I knew you would say
that. No Fed speak this week. Isn't that good news?
Does it really matter? Honestly, I do wonder. I was driving this weekend, and I saw that it cost about $100 to fill up your gas tank. Somewhere between $70 to $100 to fill up your gas tank. And this is going to have a material effect regardless of what the Fed does, right? Inflation has a real downward shift to growth, even without the Fed. So how much does the Fed speak really make a difference at a certain point?
John, this is not a small point on sort of a nudgy Monday in June. The second derivative of the gallon of gas is what we call convex. which means it has an accelerative force higher right now.
And it's pushing hard, Tom. And we talked about JP Morgan repeatedly talking up $6 a gallon on average for this country by the end of the summer. That's brutal. TK, do you want to touch on British politics?
Oh, we've got to. So much for the Jubilee afterglow. I mean, John, translate. Oh, we got to help our American viewers and listeners getting up. He's not going to get tossed out today, right?
This is what's happened, Tom. The letters go in from Conservative MPs. Once you get to a certain threshold, it triggers a confidence vote.
Yeah.
Most people assume that the Prime Minister can win that vote a little bit later this afternoon. But even if he does, Tom, and perhaps he doesn't, but even if he does, he's under pressure to make a move in a big way, Tom.
Make a move in what way? I mean, come on,
To
John.
resign.
In America, any Republican or Democrat is going to have 15% of their party that thinks they're doing a lousy job.
Yes.
We don't have confident votes. But what's a so what
There is
here?
a difference between the parliamentary system, Tom, and the presidential system here in America. In the UK, you are elected by your party to be the leader. It is up to the Conservative MPs. They've made their voice pretty loud over the last few weeks, Tom, that some people are upset about this. And those letters, I think, capture that story. To compare the two systems, let's not do that again. It's pointless.
Let's not do that again. John, is this about the seating arrangement at the House Guards when they were like the horses?
No, I think it's about that so-called Partygate,
this
Tom.
thing, they're all doing this.
I mean, you're the guy that wants to talk about this, not me. This is not on the market radar at all.
It wasn't the seating arrangement at St. Paul's.
I don't even think it's on the market radar in the UK either, Tom. It certainly wasn't the seating arrangement at St. Paul's. We're done with this, aren't we? I knew this wouldn't be value add, so why bother? Futures on the S&P.
We're on the edge of Down Abbey is what I know.
On the NASDAQ 100 up by 1.4%.
Sterling
I'm told
doing?
Lizzie Burden will catch up with us a little bit later and maybe we can make some sense of this whole thing. Yields higher by 2 or 3 basis points,
Nice finesse there,
296.25 on a US 10-year. In the commodity market, up 0.8% on WTI. Bramo 119.81.
All right, today is a pretty quiet day when you look at the events ahead of what we expect later this week with respect to the ECB as well as the latest inflation data. I do find it interesting that Congress is going to be returning after their prolonged Memorial Day recess. A lot on their plate, especially with some of those shootings that have been reported over the weekend and the issues, the pressures around gun control laws. I'm focused, though, on gas. How do they respond to the idea that we're seeing gas prices, on average, reach upwards of $4.80 in the United States? At what point can they engage in additional actions, especially as the White House has basically said, we don't have that many more options? We also have the UK Prime Minister Boris Johnson, as we were just talking about, facing a no-confidence vote as the leader of the Conservative Party. I'm not going to try to add sense to this. I think that we just got enough of trying to add sense to this from people who don't know that much. John can add to this, as well as Lizzie Burden of Bloomberg News and Bloomberg Television. And at 1 p.m., we get the keynote presentation at Apple's Worldwide Developers Conference. This is interesting to me, especially after Apple shares have been down more than 17% so far year to date. What can they do in terms of new technology, in terms of getting people excited about a new iPad or some additional aspects of their business to really drive sales going forward? How much growth have we already baked in, and how much can they really regain with innovation, John?
Bramo, thank you. Let's get to Laurie Calvasina, the head of US Equity Strategy at RBC Capital Markets. Laurie, a little bit of a trim to your price target. Let's call it a trim. 4,700 from 4,860. Just walk me through your thinking over the weekend into this week.
Sure. You know, John, I think we've all had the question on our minds, are we headed into a recession or not? And I will tell you that we have 11 different models that we look at, but a fundamental assumption behind all of our modeling is the idea that we're going to see a material slowdown in economic growth but skirt the recession. And so when we do that, we've basically updated our GDP models. We've added in a new valuation test, which was really responsible for a lot of the downgrade to the forecast. But in general, we think that the economic data is, we're taking the optimistic case here that the Fed will be able to pull this off. But we do think that bond yields essentially have taken a bite out of some of the forward return of the market. We talked about that actually in April. That continues to be the case today. And, Lisa mentioned peak bearishness coming on. That's something else we're modeling in. So we basically look at the recovery off of the low that we had on May 19th and factor in the typical recovery that we see in growth scares. And it's about a 25% type return. AAII, that net bearishness that we've seen there, also tends to give you a bit of a springboard. So while we are factoring in this economic ratcheting down, we do want to take account of the fact that sentiment probably has, hit peak bearishness as well.
Lori, I want to take an individual sell-side report. I know you don't want to talk about individual stocks, and I'm not going to ask you about Amazon, but Ron Josie over at Citigroup publishes on Amazon with a stunning view out 1, 2, 3, 4 years. The EBITDA growth from pre-pandemic is 43 billion out to a present 71 billion, out to a window in 24 months of 104 billion. I believe that's growth. You are pounding the table that growth does better as value fades. Discuss that.
So look, I think we also need to just take that economic environment we think we're in and apply it to sector and style positioning. And typically we see that when you exit a hot economy to a cool economy, one that's above growth to below growth or above average to below average in terms of the trend itself, you typically see value cede leadership. Value does well in a hot economy, and you tend to see growth outperform in that cooler economy. Now, defensives would do well in the recession, but we think that's, a risk, but not our base case. And when we look at growth as well versus value, we find that basically the relative valuation multiples are all starting to look reasonable or slightly attractive again. And if you look at the long-term growth expectation between value and growth, it had been sliding. So growth was really coming down relative to value. That tends to drive the relative PE multiple, but we have actually started to see some stability in that relative long-term growth expectation. In other words, investors have not given up on the idea that growth is better than value on the growth front, and that should give some support to the PE multiples here.
So, Lori, what's going to drive the S&P? What's the leadership going to be to get it to 4,700, which is your new target?
So look, we like technology, and I want to stress that we are being very particular and very picky on that broader TIMT trade. So we don't like the communication services sector. We're neutral on consumer discretionary, but we like that classic tech sector where the valuations have gone from being ridiculously overvalued to slightly attractive to neutral, depending on what day we update the model. Earnings revision trends are actually starting to improve for the technology sector again, and it's one of the biggest sources of net income in the S&P as well as market cap. So we think that helps stabilize the market. And if we do have a peak in bond yields here, which is a call our rate strategy team is making, that should also help the tech sector stabilize in terms of performance. On the value side, Lisa, I would tell you look at financials. We've got a much better valuation case than what we've got in energy or materials right now. Earnings revisions are positive, but they're not peak-like, which I think they may be starting to look like they are in energy. And we really think that as the market sort of transitions away from the recession fear narrative and towards the slower growth narrative, that can breathe a little bit of life into this financials trade again in terms of a relief.
Laurie, wonderful to get your thoughts as you cut that price target just a little bit. Laurie Calvasina there of RBC. Some people out there still bullish. JP Morgan, one of them. Morgan Stanley, certainly not bullish. Pretty bearish, Tom. Mike Wilson coming into this week saying that we could go down to 3,400. He said that before.
Yes.
The bear market rally that began a few weeks ago can continue for a few more weeks until the Fed makes it crystal clear they remain hawkish and earnings revisions fall well into negative territory. He's looking for that 3,400 number by mid to late August.
Get out the calendar, and again, ECB Fed is what's definitive in June. But John, I love the idea here that people, and you've been very good on this, the calendar is sped up where we're doing mid-year reviews the first week of June, second week of June. I like what Goldman said in that there's a narrow what-if path. I like that, in that there's a range of views, right? And the media loves that and all that. But in the middle is a narrow path of how we, to use the cliche, thread the needle through 2022.
A narrow landing strip for a soft landing over at Goldman. Tom, that's the hope. That's the hope.
Yeah.
We all share that hope.
I mean, to me, the uncertainties are so great, and I'm going to look at the Bloomberg, look at the terminal, and what I see is a jump condition in copper.
Equities picking up, that's what I see. Up by more than 1% on the S&P 500. Yields a little bit higher by 2 or 3 basis points, 295.89. Looking ahead to this week, CPI on Friday, an ECB decision this coming Thursday. A very interesting week ahead. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In the UK, rebel members of Parliament from Prime Minister Boris Johnson's Conservative Party have forced a confidence vote today that follows a series of scandals. Opponents will need a majority of 359 Conservative lawmakers to force Johnson from office. Uncertainty over his future comes as Britain's face soaring energy bills and the highest inflation in 4 decades. Saudi Arabia is signaling confidence in demand for oil. The kingdom has raised prices more than expected for Asian customers. Oil has rallied almost 60% this year. Rebounding demand from countries recovering from the pandemic coincided with a tightening market after the invasion of Ukraine. And life in Beijing is taking another step towards returning to normal. The city is rolling back coronavirus restrictions after declaring the latest outbreak was under control. Public transport will resume in most parts of the city. Restaurants will resume dine-in service, and movie theaters will reopen with limited capacity. North Korea has now set a record for the most rocket launches in a single year under Kim Jong-un. 8 short-range ballistic missiles were fired on Sunday. North Korea has launched 31 missiles so far in 2022. There's speculation that Kim may be preparing for his first test of a nuclear device since 2017. And U.S. senators say talks on limited gun control measures are moving forward slowly, but a deal is far from assured. Republican Pat Toomey says it feels the Senate is closer than it's ever been since he's been in office. Democrat Chris Murphy says one focus is identifying 18 to 21-year-olds that could be a danger and prevent them from acquiring guns. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
The price of gasoline is not set by a dial in the Oval Office. And when an oil company is deciding hour by hour how much to charge you for a gallon of gas, they're not calling the administration to ask what they should do. They're doing it based on their goal of maximizing their profits.
That's the view of Pete Buttigieg, the U.S. Secretary of Transportation, on ABC over the weekend. From New York City this morning, good morning. Your equity market's shaping up as follows on the S&P. We're positive more than 1%. On the NASDAQ 100, up by 1.35%. It's a nice move, Tom. In the FX market, euro dollar 107.44. Bank of America looking for 2 half-point ECB hikes in 2022. That's 2 50 basis point hikes in 22. The expectations for the ECB this week, Tom, sky high going into Thursday and beyond.
Okay, let's stop the show. This is really important. I mean, what are we going to see in Frankfurt actually on Thursday? We don't cover this like we cover the Fed, but is it a normal thing where they're going to come out with some kind of announcement and it's going to be a normal press conference, or is it going to be a snooze fest, or is it all hell breaks loose like at Bank of England 6 weeks ago?
It's setting the runway, the guidance, the path forward for the summer. That's what most people assume this meeting is this Thursday, just setting us up for what they're about to do later this summer. You've got the hawks who are pushing for 50 basis point moves. Bank of America think they go there. Others say they go at 25. And overwhelmingly consensus, Lisa, right now is 25 later this summer a couple of times, and you get back to zero pretty quickly.
People agree that the ECB is far behind the curve, but not as far behind the curve as the Federal Reserve. I can't imagine, though, raising 250 basis point times. I mean, the idea of a 100 basis point rate hike in 2 meetings, it's hard to wrap my head around that, given the negative yielding from the ECB. Yeah,
it hasn't hiked since forever.
Where we still have negative yielding bonds. There you go.
Been negative since 2014. Anyway, we need to talk about Washington.
Yes, we do.
I'm trying to reconcile what they're saying on the international stage, Tom, with what's happening at home, and they're reassessing their international view because of domestic pressure. Perfect example is China. You had Gina Raimondo, the Commerce Secretary, over the weekend speaking to CNN. She said this, Tom: steel and aluminum, we've decided to keep some of the tariffs because we need to protect American workers. There are other products, household goods, bicycles, it might make sense. I know the president is looking at that. On the same weekend, we had this from the State Department. The Secretary of State said this: China continues its genocide and repression of predominantly Muslim Uyghurs and other religious minority groups. Tom, that is a super uncomfortable position for the White House to be in, to be talking about removing some tariffs and at the same time be talking about a country that's conducting genocide.
And the oddity here for our international audience, and John, correct me if I'm wrong, Lisa, jump in, this is flat out the only bipartisan agreement in Washington. That's really what's going on here.
Oh, Brammer, without a doubt, on China and having an aggressive stance towards China, pulling back those tariffs. It's going to be interesting to see how that one develops.
Politically, it is a very bipartisan issue. But if you look at the business side, and frankly, if you look at the fact that people are complaining about inflation, perhaps it's a little bit more nuanced, right? I mean, we have companies that are coming out and taking a much softer tone with China, continuing to expand in China, not necessarily withdrawing as quickly as people would expect. And you have people who are very worried about the price of goods. So you put these two things together, and suddenly they're between a rock and a hard place. You're seeing this with gas prices as well as some of the policies toward Iraq, Iran, and Saudi Arabia.
Big time. This conversation, Tom, makes the UK picture feel pretty tame.
It was pretty tame is the way to put it. She's packed all her hats away after the Jubilee for 72 hours straight. Lizzie Burton joins us at 10 Downing Street right now on the Johnson Follies. The distinction that I see, Lizzie, is very simple. And this is, I think, from the Telegraph, it may be from the Times. Theresa May had an actual cadre, a clique, that was against her. This seems to be very diffuse, very disparate across the Conservative Party.
And that's what's scary for the Conservatives. They don't actually know how far above the 54 threshold of letters it took to the chairman of the 1922 Committee of Conservative Backbenchers to trigger this vote. It could be much higher, and there could be a much bigger level of discord within the party, but that's what will be measured today, although it is a secret ballot. So we'll get the vote between 6 and 8 p.m. today. It doesn't automatically mean that Johnson will go. Of course, you have to have the 180 votes to oust him. Theresa May lasted, Margaret Thatcher lasted, but in both cases it weakened their authority and they did eventually go. So this could spell the beginning of the end for Boris Johnson. The hope will be, though, that this vote reunites the party, and that, but what he could do is call a quick general election, and in that case, that's when the markets are going to care about this.
Lizzie, are there any policy implications to the point that you were just making of when markets will actually care? What's the policy ramification of a win or a loss of a no confidence vote here?
Well, this underscores how badly the Conservatives have handled the cost of living crisis, and that is what the markets care about. The markets care that the Bank of England is having to step in again and again in the second half of this year, when it was expected to pause the hiking cycle. But because Rishi Sunak, the Chancellor, didn't get in control of inflation in March, that is why he is no longer really seen as a prime runner and rider to replace Boris Johnson if he goes.
Lizzie, wonderful to get your thoughts on the situation. Lizzie Burden there. We'll catch up with you in the next couple of hours as well. Looking ahead to a vote a little bit later this afternoon. As Lizzie pointed out, Lisa, at the moment, this isn't going to be on the radar of this market until and if there is an election that changes the fiscal future of the UK.
And right now, it's very much more the Bank of England next week and what's going on with the Euro region and inflation. But right now, this isn't on the radar because the reality of what people are paying is that much more present. And that's the case in the United States as well. And that's why I think that when you talk about blurring of the lines of policy and what the political popularity is come into play, all of a sudden inflation takes center stage. And how much does that overwhelm and upset some of the talking points of both parties?
Sometimes you don't care about politics, Tom. You just care about the bill at the end of the month. And for some people, they're just sitting there thinking, I don't care who runs the country. I want my bill to be lower, prices down.
We don't do calculus on Monday, John, but it's real simple. There is an acceleration in the price trends of inflation right now. That's really important math. And what that means is the rapidity, the rate of change here into June is breathtaking. That goes Friday, John, is critical on CPI. Can you imagine if we do in Italy or Germany and surprise to the upside?
8.3%, the median estimate, in line with the previous read. Nomura's at 8.5. Morgan Stanley is at 8.5. BNP's at 8.4. HSBC at 8.4. Wells Fargo at 8.4. There's some names out there, Lisa, at north of 8.3, 8.4, 8.5.
And the composition of the inflation has been shifting. And this has been an underplayed reality that we saw come through with retailer earnings. They can't adjust quickly enough to what people are buying and when. And you can see certain discretionary items around the margins being cut back on because consumers have so many fixed costs and still want to get out and do things post-COVID. It is such a complicated picture for these corporations.
Awesome lineup this week. Through this morning as well. Bruce Kasman of JP Morgan is going to be joining us shortly. Going into that conversation, futures nicely positive, up more than 1% on the S&P, on the Nasdaq up by 1.4. Yields higher by a couple of basis points, 295.52. And look out 120 on WTI, 119.64. Crude higher by 6 or 0.7%. Heard on radio, seen on TV for our audience worldwide. This is Bloomberg.